All right. So we'll be looking at contemporary approaches to management accounting. What are the new developments now that management accountant has to take into consideration? Those are the things that we are going to be looking at the contemporary approaches to management accounting. What are the new development, new things that management accountant has to utilize so that he or she can be able to help the organization to achieve whatever objective that they want to achieve. So we are going to be looking at issues of ethics. Okay, but just that we don't have question on the ethics, but I just have to remind you so that you read on those ones. So we are going to be having issues of ethics. So we know how ethics, you acting in a good conduct, we know how important, because management accountants are going to be using money. They are going to be using economic resources of the owners. So you have to be someone who is going to be acting in a good conduct, who is going to avoid doing what he or she will not like others to do to him. So we have the issues of ethics. So for the ethics, you are going to be using the AFAC principles. So those integrity, professional behavior, objectivity, professional competence and due care, and also confidentiality. You are going to be looking at those things. Okay, as you are trying to act in a good conduct, there are certain things that will be preventing you to do what is being expected of you to do. So people are going to be causing you. Your principle is that you don't want to steal, but the opportunity will come for you to what? To steal. How do you overcome those things? So we'll be looking at the threats, things that will be preventing you from what? From doing what you want to do. Okay, you said that you are not going to be doing, or maybe if you have been elected into that particular position, you are not going to be taking money from anybody. But as soon as you get there, your mom is sick, your dad is sick, you see that you have an opportunity to steal now. Those are the things that we are going to be talking about, or examples of the things that will be preventing you from doing what the code is saying. So those are the threats. You have to also look for the threats and other issues. Apart from that one, we also look at issues of just in time, total quality management, and benchmarking, balance scorecard, and value chain analysis and other issues. So you can read about those ones. Okay, but my focus over here will be on ABC, activity-based costing. Okay, so you'll be looking at activity-based costing, but you can read on the theory side, the ethics, the total quality management, just in time, balance scorecard, benchmarking, value chain analysis. Okay, so our focus over here will be on the ABC and also what we call throughput accounting. Okay, so the ABC is activity-based costing. Okay, traditionally, what we normally do is that if you are using assumption costing, what we do is that we have a fixed overhead, which are not directly attributable to the operations. So you are going to be having a fixed overhead. Okay, let's say a fixed overhead of 20,000. Okay, this fixed overhead, it can be a rent. It can be a general rent. It can be electricity, which we cannot directly attributable to what? To the activity that is bringing this particular one. We know that we are going to be having various departments, various functions. We are going to be having a production department, sales department, and the other ones. But the rent is just a general amount that we are paying, which part of it is for the administrative, part of it is for production, and part of it might be for the warehouse. So how do we share this now? Under the traditional assumption costing, what we do is that we just look for a basis of apportionment. So we can say we are going to be apportioning what? The fixed overhead on labor hours. Okay. In natural sense, the rent that you are bringing in, labor hours has nothing to do with the rent. So labor hours or the workers are not the one that is bringing the rent. They are not the one that we are incurring the rent on. No, they are not a direct factor contributing to the rent that we are incurring. But we normally share this cost based on labor hours, based on machine hours. And at the end of the day, the department or the function that has the highest number of labor hours will be having the highest of the labor cost. In actual sense, if we should share the fixed overhead based on what is actually bringing the cost. They might not be getting that particular figure. So we have to now switch to what? To a method that is going to show a fair apportionment of what? Of the fixed overhead, the fixed cost. That's what we are coming to look at, the activity-based costing. So if you have a canteen cost, okay, if you have a cost like canteen cost, okay, this canteen cost, which is 20,000, it is likely to be based on number of employees that each department is having. Okay, so the canteen cost. Okay, so if your sales department is having 20 employees and those who are having 10, production department is having 10 employees and administration is having 15 employees, the one with the highest employees are the people that will be eating more at the canteen than the other ones. So we can say that, okay, the canteen cost will now be the number of workers that we have over there. If you don't have workers, there's no way we are going to set up a canteen for them. So the canteen cost can be attributable to what we call the number of employees. So we can say the number of employees is the cost driver for the canteen cost. Okay, if you have electricity, electricity will be the meter reading. Okay, so the number of watts that you are using, it will be based on the number of watts that you have used. If we are in a compound house, we are all using electricity. If you want to share the bill, you enter the people's room and count what they are using. It means that you want to base the cost on the number of what you want to make it to be what to merit. You want to be fair in the apportionment. So that is what you are going to be doing. So we are going to be looking at activity-based costing. Activity-based costing is that the fixed cost should be shared based on what is bringing in the fixed cost. So if you have a canteen cost, machine hours has nothing to do with canteen cost. So we cannot use machine hours to apportion canteen cost. No. What is bringing in the canteen cost? If you have transportation, if you have fuel, what is bringing in the fuel? The fuel can be the number of cars or the number of what? Kilometers or number of miles has been covered by each of the departments. That is what is going to be bringing the fuel cost, the number of rounds that the department has done. So if you have done a lot of rounds, it means that they are going to be buying a lot of fuel. But for the traditional one, we just find a base and share the fixed cost. But we want to share the fixed cost in a very effective manner. In a very effective manner. So we are going to be using what is the activity that is bringing that particular cost. We try to use the activity to share the cost available to the various departments. So we are going to be looking at activity-based costing. Our focus is only about the apportionment of the fixed cost. Okay, the fixed cost that cannot be attributable to the various departments. Okay, so our focus is only based on, so let's have department A, B, C. Okay, the selling price will be given to you because they are producing different items. So the selling price will be given to you. So you know their selling price. Okay. Then they can also give the material cost. So the material cost is a direct cost. So the number of material that you purchase, the higher the number, the higher the cost, which is a cost that we can attribute to each of the sessions. So you'll be having material cost. Okay, so you have your material cost, that will be a deduction. Then this will also be a deduction. We are finding profit. Okay, so this will also be a deduction. Then you can have labor cost. Labor cost is also the number of employees that each department is having will get each this one. So we can have also this one. We can also have variable overhead. Variable overhead can be rent, but this particular rent is going to be varying with the level of output. So it can be an overhead, but this particular overhead is going to be what? Varying with the level of output. Okay, so it can be commission that we are paying, but the commission will be based on the number of units that the person is selling. So the more you sell, the more you get a commission. So we can classify the commission also as a variable overhead. It's just an overhead, but this particular overhead is going to be varying with an output level. So it will be classified as a variable overhead. So we have this one over here, this one over here. Then we might be having our contribution. So you have your contribution if they are asking you to prepare profit or loss. Okay, so you put your contribution here. Okay, but the contribution over here we need to subtract fixed costs. But the fixed cost will be given to you as one amount. It's just a single amount that will be given to you. Okay, so how do we determine the portion of the fixed cost that is for product A or department A, department B, department C? We look at the cost that is being incurred, then we look for what is the likely item that will be bringing the cost. What will be the cost driver? What is bringing in the cost? Why are you incurring this cost? Why are you incurring this cost? Okay, if you are incurring transportation cost, it means that the number of rounds that you have done, that is the thing that is bringing the transportation cost. Okay, if you have incurred packaging cost, packaging will be the number of orders that you have received, because you are going to be packaging the order for the customer. So it will be the number of orders that has been received or number of orders that has been delivered. So we look at what is the likely item to be bringing in this cost. So we try to apportion the fixed cost based on what? On the cost drivers for each of the departments. It's a very simple exercise, and it's not anything big that you have to worry about. If they should bring a calculation under contemporary approaches to management accounting, it will always be the activity-based costing. It will always be the activity-based costing. So someone should help us with the question number 1. You have to look at the requirement first, and you know what you have to do. Okay. So who is reading for us? Read the requirement before we.
Please, can I read? Oh, someone is reading.
Yeah.
Okay. The requirement.
Yeah.
Prepare and present a profit statement using ABC method.
Okay. So if they say you should prepare profit, how do we determine profit? It is revenue minus total cost, isn't it?
Yes.
Okay. So what we have to do is that don't worry yourself about the ABC. Okay. So don't worry yourself about this one. Come to your statement of profit or loss. Okay. There are some of the items you don't have to worry yourself about them. So statement of profit or loss. Okay. So let's have the product here. We are going to be having product A, product B, product C. So let's put a currency sign here. Let's keep 3 zeros at the top. Okay. So the first thing that will be coming is we need to have revenue, isn't it? Okay. So the revenue. We need to have the revenue. What is the selling price per unit for the first one?
73.
Okay. So how many units are they selling?
30,000.
30,000. So what will be the total revenue? Let's go and do some small workings for the revenue there. And okay. So let's do small workings for the revenue. Okay. So let's come to workings here. So let's have the revenue. Okay. So revenue, let's have the products here. So the products, let me just write them in full. We have the AC, ACQ, and the BC. So I just write A, B, A, B, C. So we have the selling price. Selling price per unit is what? 73 for this one, isn't it?
73.
Okay.
Yes.
The second one is what?
45.
45.
And then 95. Ish.
90.
5.
Okay. So for us to find the total revenue, we multiply by the number of units that we are selling. So what is the demand for this one? 30,000.
30,000. 50 and then 40.
50 and what? 40. Okay, so what will be the total revenue for each of them?
This one will be 2,190 if we are keeping 30 stock.
Okay, so that will be
2,190,000.
Okay, so let me bring the 3 zeros at the top there. So I'm having, let me check.
2190.
2190. Okay.
Yes. 2250.
Okay. Let me write this one first. So 219000, isn't it?
Yes. No. Okay. But since we have 30 stock.
Okay. So it will be 2190, isn't it?
90. Yes, please.
Okay. 2190. Okay. Second one is what?
2250.
2250. Okay. 2250. The last one is what?
3800. 3,800.
Okay. 3,000.
Somebody's background is so noisy.
Okay. So let's go and write. Let's go and write the 2190, 2250, and
3800.
3800. So what do we need to do? We need to subtract our variable cost. Okay, what are you giving there? You are giving prime cost, isn't it?
Yes.
Prime cost, how do we calculate prime cost? Prime cost is the total of all variable costs, isn't it?
Yes.
Okay, so the prime cost is your variable cost. So you just subtract your variable cost over here, which will be the prime cost. Okay, so the prime cost, let's go and do some small calculation for the prime cost also. Someone can find contribution straightforward and multiply it by the units. There is no problem with that also.
Yes.
So let's come to cost per unit. So how much is the cost per unit for them?
5.
Okay, 65, 32, 84. So 65, 32, 84. Okay, so we know the demand already, so we can just multiply. Okay, we know the demand already, so just multiply.
So what? 19850.
1950. Okay.
1,600.
1,600. Okay.
3360.
3360. Okay, 3360. So you also go and have your prime
It's
cost.
3360. You wrote 366. It's 3360.
Okay, 3360. So we have the 1950 here. Okay. Minus 1,000. This is 600. And this will be 3360.
36.
Okay. I said that someone can just find contribution and multiply by the number of units. You'll be getting the same answer. Okay. So if we find that one, we'll now be having what we call contribution. What will be the
240. 240.
Okay, the first one is 240.
650. Then 440.
440. Okay.
440, yes.
Okay. So we need to bring the fixed cost, isn't it? Okay. The fixed cost is what we are coming to be using the activity-based costing for now. Okay. You can see that your total fixed cost is what? What is your total overhead?
$976,000.
Okay. But this has been grouped into what? into cost pools.
5 cost pools. Yes.
Okay, the cost pools are the what? Are the things that are forming the what? The overhead. The items that are forming the overhead is what we call the cost pools. So a group of cost items is what we call the pools. Okay. Then we also have the cost driver. The cost driver is what is bringing in the cost. Okay, what is bringing in the cost? If you're having 4, the 4 is the number of cars that you have. It is the car that is bringing the 4, or it is the rounds that you are doing with the car that is bringing the 4. That is why you are buying the 4. Okay, if you are doing packaging for your item, you can't just stand up and do packaging. It means that you receive order from customers and you have to do the package now. So if no order is being received, you cannot package the items. So if you have packaging, that will be the number of orders. But the question will always give you information about what is going to be bringing in the cost, like how you have it over here. Okay, this one, they have given you the cost driver each. But sometimes they will not give you the cost driver, but they will give you the cost items and they will give you the cost drivers. You have to select which of them is what relating to this one. So all overhead relating to machine we are going to be using machine hours. All those that will be related to labor, we are going to be using labor hours. If it has to do with the customers, it has to do with maybe the number of orders, because you can't incur customer costs without relating it to what the order that you are receiving from the customers. But this one, they have given the items to us straightforward. Okay. They say overheads can be assessed, overheads can be reanalyzed into cost pools as follows. Okay, cost pool and cost driver. What is the cost for the machine service?
359,000.
Okay.
359,000.
What is our budgeted quantity for that?
400.
Budget is for 425,000.
Okay. So what will be the cost per hour? What will be the overhead rate per hour?
The overhead divided by the cost.
Okay. So what you do is that since you are giving the overhead with their budgeted items. Okay, so let's have the overheads here. We are going to bring them one by one. So let's have the machine what? Services. Machine services. What again?
Assembly services.
Okay, we have the assembly services. Okay, and
Setup cost,
we have the setup cost.
order processing and purchasing.
So setup cost. So setup, we can go to order processing. Then we have purchasing. Okay. This is, you have to learn something new over here. You see, sometimes they will just give you the quantity that is being used over here. But if they are giving you the quantity being used, it means that the cost given to you is for the quantity that is being used. But this one, they have given us the cost together with the budgeted quantity for the year. So we have to find the overhead rate per each of the activity. They are giving us 359, and the budgeted machine hours for that particular course is 425,000. So it means that 359,000, the budgeted output level is 425,000. So if we are using 359,000 for 425,000, what will be the rate per hour? So we go and find that, and we find the rate for each of them. So let's start our workings, our second workings from here. Okay, so let's come to machine service rate. Okay, machine service rate. Okay, that will be 359,000 divided by 425,000. Is that correct?
That will give us 0.844.
0.844, isn't it? Okay.
Sina,
Yes, please.
excuse me. I remember when we were having a lecture on it. You said mostly whenever they give us the budgeted, we have to also calculate to see whether the actuals actually match with what is there. So if also calculate, we'll be getting 420,000 hours. I don't know why we are still using this budget instead of working out for the actual machine hours.
I said something like that. We never solve any question like this.
We solved, but you said mostly whenever they give us this, it's not always the case. And in this circumstance, if we work for the actual quantity used, it's 420,000, it's not 425. Like here, we have machine department, which like machine hours per unit, which is 425.
Okay.
If you multiply by the units produced, you are going to get a total of 420,000 hours.
Okay.
But maybe if the circumstance change, or perhaps it's a different environment.
Okay. So I didn't remember saying anything like that. Even if as maybe that might be short-term decision making where or maybe throughput accounting where we try to find the limiting factor ourselves, but we didn't solve any question like this on activity-based costing. Mostly you'll be giving the figures straightforward. They will not give you the budgeted figures. They'll just give you the cost and they'll give you the items. So you calculate to get the actual and share the cost to this one. This one, they have given you the budgeted one. So find your rate per hour. After finding your rate per hour, you now ask yourself, how many hours has been used for the ACQ? So if I'm using 0.844 per hour and I've used 20,000 hours over here, what will be the cost? Then you just multiply by a number of hours.
Hello, sir.
Okay.
Yes, yeah.
Hello, sir. I think yesterday I raised the same. Good evening.
Yes, yeah.
I think yesterday I raised the same point, and I remember, as my colleague said, and we did a calculation based on this. And I remember in your example, you even said that these questions normally you pick from Nigeria, and basically they'll give these kind of questions. And even I remember you said that Ghanaian man will not give you the question like this and even give you the quantity. Yeah. So anytime you are having this, you should still verify and see that the numbers are correct. So I remember that was the reason why yesterday I prompted you that these figures are wrong. And this question, you give it to us as an assignment.
Yeah.
So yes, I remember it's true. This thing was an assignment and we submitted it.
Yeah.
I think we solved a particular question, like the same type of question, but not this one. But it's a question that we solved in which they give us this value. But you said I should check and see these values are correct. Because Nigeria can give you this question, but Ghana will not give it.
Yeah. Okay. But the question
I
think
that one was for the limiting factor.
No, it wasn't for the limiting.
For the limiting factor.
We also solve a question like
no, please.
We also solve a question like this.
He said,
okay.
No, but that is what it was. It was for the limiting factor.
Okay.
I remember that one very well. He said they can give you a limiting factor, but you also have to verify. You also have to verify. He didn't make any reference relating to the ABC activity base. He said, what's when you check ICA Ghana, they will never give you the cost drivers. So you will never see it in ICA. You only see it in the Nigeria ICA. That is what he said.
Okay. Okay. All right. So yes. So I remember we solved a question like this. They give us the actual figures for the year. Then we try to confirm the figure that they have been given to us, isn't it? And I said that you can decide to find the rate per what? You can decide to use the rate to find your rate per hour or the rate per the batch. Then you use it to multiply the batch. Okay. The 359,000 given to you is given on 425,000. That is a budgeted level. Okay, it's given on 425,000. So your question now will now be, okay, if I'm using 359 for 425,000, so how much am I using per hour? Okay, if I know the rate per hour, I will just come and determine the hours that I'm using for this product. So I know that an hour is 2 cedis. So if I'm using 20,000 over here, how many hours am I going to be getting? That is how we go about it. Okay, so
Okay.
the question that we solve, the actual and budgeted are always the same, isn't it? So if you do your actual divided by the budgeted, which is a total, you'll be getting the same figure like if you divide to multiply. Okay, I remember we used the two approaches, and I said that if they ask you to find the cost per unit or something, just find your rate and multiply by the number of hours, or find your total rate and divide it by the number of units that you are doing. But this is a different question where you have to do a different thing. Okay. All right. So I know that the actual and the budgeted are not the same. Yeah, I know. Yes, please. I know.
All right.
Yeah, Senator Derek, your hand is up.
Tell us, please,
Yes,
the
sir.
decimal places. Should
Yeah.
it be always 3 or 2?
It should be 2. We are using Ghana City, so 2. Okay. So let's have 0.84, isn't it?
Yes.
844.
Okay, let's keep it to two decimal places.
Okay.
Okay. So let's come to the assembly services. Okay.
Assembly. Yeah.
So let's come to okay. So assembly will be what 328 divided by
Hello, sir.
532,000.
Hello, sir.
yeah, I can hear you.
Please, assuming these figures were not given, how are you going? How are you going about it? Assuming these figures were not given,
Assuming which one?
the quantity for the period was not given.
Then it means that all the costs are incurred on the actual hours and actual everything that we are doing for the 3 products.
So if I understand this case, you are using the budgeted, right?
Yes, please. I'm just looking for the rate per hour.
The rate per the cost pool.
I will come to ACQ and ask myself how many hours has been used. Then if I find the hours, I know that 1 hour is 0.844. So if 1 hour is 0.84, then if I'm using 10,000 hours, what will be the cost? I'll multiply by my rate per hour. All right. So we have 328
Over 532,000.
over 532,000. Okay, what are you getting?
0.62. 0.62.
Okay. So you come to the setup cost. Setup cost, we are having setup cost.
36,000.
Okay, 36,000 divided by 720.
Divided by 720.
Okay, what are you
50
getting?
cities.
50.
50.
Okay.
Yeah.
So let's go to our processing.
Order processing.
Okay, order processing.
So please check the setup cost, the cost driver. The amount, is it 720 or
It's
there
720.
are some? Okay.
So we have 165 divided by
34.
165,000 divided by 34,000.
Okay.
What are you getting?
4.85.
4.8.
Hello, sir.
Yes, please.
Ish.
Please, can we check the setup? It's 0.05 or
Setup.
No,
that's
it's
36.
Yeah, it's a
We have,
0.05.
we have 3 zeros at the top.
Yes.
No, the
And
setup is not in thousands. The 720 is not in thousands.
The 720 is
The
not in
720 is not
thousands.
in-
You just 720. The number of setup.
oh, okay.
Yeah.
Okay.
Okay. So purchasing is how much?
88,000.
Okay. Purchasing is 88,000 divided by
12,400.
12,400. Okay.
$7.1.
7.1. Okay.
One.
Okay. So let's count to okay. So let's come to you have also been provided with the following estimate for the period. Okay. So let's come to the estimate now. Okay. Let's come to the machine hours. How many machine hours are we going to be using to produce the ACQ? So let's come to the machine service cost for them. So let's come to the machine service cost for each of the products one by one. Okay, so we have the A, B, C. So what is the demand? What is the demand for them? We have
30,000.
30,000, 50,
50,000 and 40,000.
and 40,000. Okay. But this one, the machine service is calculated on machine hours. So you have to ask yourself, how many hours are you using to produce a unit? How many machine hours are you using to produce a unit of the ACQ?
4 to 5.
Okay, so we are using 4 hours for that. So if I'm using 4 hours, you come to the hours over here. So if I'm using 4 hours to produce 1 unit, how many hours will I use to produce the 30,000? How many hours are we using? 120,000.
120,000.
Okay. This will be
112,000.
and this will be 200.
200.
Okay. So that will be
We
200,000.
have 420.
Okay. So I'm using 120,000 hours. I'm using 100,000 hours and what? And 200,000 hours.
200,000.
But what is the rate per hour?
0.84.
Okay. So you multiply your hours by the rate per hour. So 0.84, 0.84, 0.84.
The first one is 100,800.
100,800.
800.
Okay, so 0.84 multiplied by 120,000. Okay, so we have 100,800. Can we say that is 100.8? Because we are keeping 3 zeros
Yes.
on top. Okay, so let's come to the second one.
Then we'll have 84.
Okay, that will be 84. Okay. So we have 84 here.
168.
168. Okay, so you can go to your machine service now. You can bring your machine service will be a cost of 10.8, 84,
84.
168. Okay, let's go to the issue of labor hours for them. So let's find the labor service cost for them. Okay, labor service cost. So we have A, B, C. So we have to find the labor hours first. So the demand will be 30,000.
30, 50 and 40.
and what? 40. Okay. So we now look at the labor hours that we are using. The labor hours, direct labor hours. How many hours are we using to produce 1 unit of ACQ?
273.
We are using 2. So it means that we are going to use 60,000 hours to produce that. So 2, we have 2. So the labor hours, 273. So let's find the total now. We'll be having 60,000, 35,000. Okay, 350,000,
Then
120.
120.
Okay. So let's now find the rates. We can find the labor cost now. So let's find the rate per hour. So the rate per labor hour. So what is the rate that we are using? The first one, 0.62, isn't it? So we have 0.62. An hour is 0.62. So we multiply by 0.6.
37,200.
So that will give us 37.2. Okay.
And 217.
17.
Okay. Okay. So that will give us 217. Okay.
74.4.
So 74.4. Okay. So 7.4. So we can now go there and put our cost there as the first one is,
Assembly.
yeah, the for A is what?
Okay, let's start from
Okay, let's start from this one.
37.
74.4.
Okay, 217.
The first one, 37. 37.
Okay, 37.2.
0.2.
Okay. So we go to setup cost now. Okay. So let's come to the setup cost for them now. Okay. So setup cost. Let's come to the setup cost. We have setup cost. We have the A. We have the B. We have the C. What is the setup cost? Setup cost, what are we using?
Number of setups.
Okay,
Number of setups.
let's come to this one now. You can see this one, they have given us the number of setups straightforward, isn't it?
Yes.
Okay, sometimes they will not give you the number of setups, but they can give you setup a unit in what? In the setup. So you have to divide to get a number of setup, but they have given us the setup straightforward, the number of setups for straightforward. So we can have our number of setup.
130.
So number of setup that has been used is, okay. The first one is what?
220.
Okay.
220.
220. 130.
130. Okay.
130 and 210.
And
210. 210.
Okay. What is the cost per setup?
210.
No, what is the cost per
210.
setup?
50.
The cost per setup is 50.
50 first.
Okay, it's
50.
50 series. Okay. But we are now using 220 setup. So it will, for us to find the cost, it will be 50 multiplied by. So you count to the cost per setup here. Okay, so that will be, you multiply by 50, 50, 50. What are we getting?
11.
Okay, this will be 11. Okay,
Then 6.5.
6.5. Okay,
10.5.
okay, 10.5. Yeah, I saw the hand up.
6.5. 10.5.
Yes, Mr. Mohammed, I saw the hand up.
Senior, please, the number of setups, the 720, how did we divide to get a 220 for the A and the rest?
they have given us the question. You have also been provided with the following estimate for the period. So number of setup for A is 220. The B is 130 and the C is 210. So you have been provided with this information added down here.
Okay, I've seen it. Thank you very much.
Okay. So this question, they are not fair. They should give you the customer order per unit so that you have to divide to get a number of orders, but they have given you this one straightforward. So the only technical side is to find the value before you multiply. So let's come to order processing. Okay, so can we send the cost there? Can we send this cost there? 11. So I have 11, 6.5, and what?
6.5 and 10.5. 10.5.
Okay, and 10.5. Okay, so let's come to the order processing. Let's have A,
Order processing.
let's have B, let's have C. So what will be the number given to us? So we are given the numbers.
18,000.
18,000. Okay.
10,000.
10,000 and what?
10,000.
We have two 10,000s.
Yes.
Yes.
Okay. Okay. What is the budgeted ordering cost per order?
4.85.
Okay. So cost per order, we have 4.85. So 4.85. 4.85. Assuming you are not giving the budgeted figures, your order cost over here, which is 165, you just share it based on what? Based on 18,000, 10,000, and the 10,000. It means that the budgeted amount is the same as the what? The actual amount. So you just share it based on the 38,000. Okay. But if you are giving the budgeted, find your rate first. Okay. All the questions that we have solved, we don't have, or the assumption is that the budgeted is the same as what? The actual. So we just go straight forward to share. Okay. So let's come here. What are we having for the first one?
87.3.
Okay. So 87.3. Second one is what?
48.5. 48.5.
Okay. 48.5. And this will also be 48.5. Okay. So we can now move on and have 87.3, 48.5, 48.5, 48.5. Okay, let's go to the last one. And let's go to the last one there. So we have the purchasing. Last one is purchasing. So the purchasing, are we giving the, okay, supplies order? We are giving the order already. Okay, so we have 5,200 for A. So A,
600.
A. So the number is over here, 5,200,
3,600.
3,600,
4,200.
and 4,200. So what is the cost? 7.1, isn't it? So the
Yes.
cost per 7.1, 7.1, 7.1. What are we having?
36.92.
Okay. So 36.92.
25.56.
25
No.
points.
5.56.
Okay, 0.56.
Yes.
29.82.
29.82. Okay, so someone should pick those figures for me. 36.6. So
Okay. Somewhere.
36. 92,
25 points.
25 points.
29.82.
Okay. And the last one is what?
29.8.
29.82.
82.
So just find your profit now. Okay. That is nothing difficult about. I cannot give you a simple question like this in more canon. That can never happen. Okay. So yes. So this is the reason. Okay. Okay. So what is our profit for the first one? 24, 240, 240 minus 100.8 minus 37.2 minus 11. 87.
Loss of 33.22.
Yeah.
33.22 loss.
33.22. Okay.
Profit of 209.94.
209.94. Okay. So the last one is what?
108.78.
108.78. That's all. Sinariko, are you there?
Yeah, yes, I'm here.
Okay. Okay.
Yeah, I'm here.
Yeah, it's always good to learn something new. Okay. If you are not giving any
Nyadam.
budget, yeah, this is Leonardo. See,
Nyadam.
this Linus.
Hey, Linus. Since I'm getting different figure for the second one.
Oh, really?
Let me see the contribution. Yes.
All right. Let me check for you. Contribution is 650.
So it's wrong. So it's supposed to be 268.44.
I'm coming. 48.5 minus 25.56. Okay, 268.44.
Yes.
268.44. So the third one is correct. Or you are here to confirm that one?
I'm here to confirm.
Okay, confirm. Let's see. Okay, so maybe the person who got that figure, maybe he is finding it difficult to get my handwriting, so that is fine.
The third one is correct.
Okay. Okay, so 108.78, isn't it? All right. So yes, let me tell you something. The ABC that you are going to be seeing in the exam, okay, it is not likely that they are going to give you something. If they will give you ABC, they will not give it to you like this. Okay, they will just give you the cost, but they will not give you the quantity and those ones. So if you are giving the cost like this without these items, if you are giving a cost like this without these items, you just come and use your figures given to you like this to find your cost now. So you just find the labor hours that you have used. So it means that the labor hours used over here, we have used the 359 for it. So you just use the hours to apportion this one. That is the question that you are likely to see in the exam without the quantity for the period. Okay, without the quantity for the period. Okay, so they will give you just the cost and they will give you these items for you to find your cost per each of them for each of the activity levels. Okay, or the product which would be the ABC or something like that. Okay, that is likely to be the question that you are going to be saying. Okay, all right.
Okay, so Sina, in that case, you just sum up the cost pools here. Then you divide the overhead by it to find the rate.
No, you can decide not to find the rates. You can find the total by how we
Okay,
do the
the
proportion.
ratio.
Yeah. Then you can, because they ask you to find a profit, they are not asking you to find the amount per unit. If they ask you per unit, that is what we normally do the rate one. But if they ask you total, just do. So you can see that one of them we have, if you look at one of these ones, so we are going to be having this one, the total use for customers order is what? Is 38,000, isn't it?
38,000.
Okay. So it means that if you are not giving these figures, okay, if you are not giving these figures, okay, if you are not giving these figures, okay, it means that you are going to be using 38,000. Please, the order processing, okay, it is a cost incurred for all the three products. Okay, so this 165,000 is for the three products. Okay, what is bringing in the 165? It is the number of orders received. So you ask yourself, for the year, what is the number of orders received for each of these projects? So we receive 18,000 for A. We receive 10,000 for what? For B. And we receive 10,000 for C. Okay, the total cost incurred in delivering all this order is 165,000. So 165,000 is for the three products. How do we share the 165,000 now? It will be shared in the proportion of the orders received from what? Each of the products. So it will be shared in a proportion, 18,000 is to 10 is to what? Is to 10. So you just do your 18,000 divided by the total of 38,000. The meaning is that the 165,000 is incurred on a total order of 38,000. But the total order over here is for three products. So how do we know the ordering cost for each of the products? So you have the 18,000 divided by 38,000 multiplied by 165,000. So that's how you find the portion for that one. Then you also have the 10,000 divided by the 38,000 multiplied by the total cost. The 10,000 divided by the 38,000 multiplied by the total cost. If you are not given this. Okay, if you are not given this. But if you are given this, just find your budgeted rate per the activity. Then you look at, okay, what is the number of unit used for this particular product. So you just multiply that number by the rate that you have established. That is why we go about it. All right.
Okay, so senior, assuming this was in the exams and somebody had done it as if they didn't give the budgeted one, would the person be correct?
Why? The question is, are you saying that the examiner has wasted his time to give you the budgeted one? There's a reason that they have given that one to you, unless it's not relevant.
Selanos.
Yes, please.
Okay.
Selanos.
Yes, please.
Hello, sir.
I can hear you, senior.
Hello.
I can hear you, senior.
Yes, I'm going through the notes. I'm saying that I'm going based on the class alpha, beta, and gamma.
Yeah.
And that question, it was the same format, And then you told us that we should rather compute the figures ourselves
to compare.
Use the figures.
As if you should check whether they are the same there.
Yes. So in that, I remember in that question,
everything
you have to calculate all over. Yes, you calculated all over again.
Okay.
Just to confirm the figure there, even though the figures were there.
Okay.
But you calculated everything to confirm the figure.
Yeah.
And there's another question too that we had the rate was given, but the overhead cost, the first cost was not given. So I remember you show us how to compute for that figure.
Yeah.
That is the Links Limited make 3 products using Broly, and then that one we have ABC.
Yeah.
So there are several questions that I know I have watched about 2 or 3 videos from you, so I know. So this one, that's where my confusion is.
Okay.
Because in the previous question I resolved, you said though this thing is there, but we should still compute and find out
if
it may happen that this question, yes, if they are the same. And these figures, if you are to compute, all of them are wrong.
Yes.
Yes. If you are going by that one, all these figures are wrong.
It means that your budgeted is different from the actual. This figure
Yes.
given to you over here is budgeted. Okay, the quantity for the period, they are all based on budgeted
That
figures.
is
Yeah.
that's where my confusion is. Because
Okay.
the other one that we saw, it was the same person.
They are the same.
I think maybe after the class.
Okay, they were the same, isn't it? We compare the actual with the
Yes.
budget, they were the same, isn't it? Okay. Since they were
Yes.
the same, even if you go with this particular one, by having the cost divided by the budgeted one, at the end of the day, you'll be getting the same figures. That's why we just stick to the actual and move on, because they're all the same. If you divide it by the budgeted, which is given to you to get a cost, at the end of the day, if you multiply, you'll be getting the same answer as if you use the actual divided by the total multiplied by the cost, because they are all the same.
Yes,
The
because in
budgeted
this case,
one, yeah.
because the previous one, the alpha, gamma, and beta questions, everything was the same. But now that this one is different from when you have to compute yourself. That is where my confusion is. Because I don't see why if you should go by the drivers. If I should use the drivers, then I don't see the difference. I don't see why we are going to use it. Because cost divided by the drivers. And the drivers is saying that you should. I think I'm learning a new thing.
If you budgeted to buy 10 tomatoes for 10,000, you went to the market and buy 9 tomatoes, will you still be paying the 10,000?
No.
Okay, so why are you not saying that you are going to be using the budgeted figure is 10,000 for 10 tomatoes? At the end of the day, you're going to buy only 9 tomatoes. Why are you not saying that, okay, you are going to be giving the 10,000 to the 9 tomatoes?
Okay, because you didn't buy the 10 tomatoes.
Because you
So you
didn't.
cannot pay the person the
Okay.
full amount.
The 359,000 is based on what? 425,000. That is the budgeted. If you produce 425,000, we are going to incur 359,000. We can't incur machine hours of 420,000 and say that they are going to give for 359,000. No. If you calculate the total, you are getting 420,000, isn't it?
Yes.
Okay. So how come?
Yes, sir.
Okay, the cost is for 425,000. The cost is for 425,000. Now you are having 420,000. You are saying at the same cost. No, it cannot work like that. Are you okay? So the one that we solve, the actual are the same as the budgeted. That's why we just stick to the what? To the actual. Okay. All right.
So I think that this is like we are flexing, right?
Exactly.
Then can we say yeah, okay.
All right. So let's look at question number 2. Okay. It is always good to learn something new. All right.
Yeah, so.
Question number 2.
Okay, question number 2. All right. CM Limited was formed 10 years ago to provide business equipment solution to local businesses. It has separate divisions for research, marketing, product design, technology, and communication services, and now manufactures and supplies wide range of business equipment like copiers, scanners, printers, fax machines, and similar items. To date, it has evaluated its performance using monthly financial reports that analyze profitability by type of equipment. Has returned from a course on which it had been suggested that the balanced scorecard would be a useful way of measuring performance. Required. Explain the balanced scorecard and how it could be used by CN Limited to measure its performance. While on the course, the managing director of CN Limited overheard someone mention how the performance of their company had improved after they introduced benchmarking. Explain benchmarking. and how it could be used to improve the performance of CN Limited.
It seems that we have solved this question in class before.
Thank you.
It seems like we have answered
Yes,
it.
we discussed it, I think, during tutorials after the approach.
Okay, I've forgotten. I thought it's a new question. So maybe that was a bonus question for you. Okay, so this is what we have over here. So they are saying that currently these people are measuring what performance using only what profitability. They are only using the financial measures. Okay, how much does our profit increases? What is the cut down in cost? What is the return on our investment? And what is the earnings per share? They are using all those things. They are not paying attention to what are the items that will be increasing or what are the items that will be affecting these particular items. Okay, your revenue is going to be affected by the number of customers that you have. So if your customers are not satisfied, there is no way they are going to be buying most of your items. So your revenue is likely to what? To reduce. So if you are paying attention to only the revenue and forgetting about the satisfaction of the customers, it means that your revenue is actually going to be reducing. Okay, so and also your revenue will also depend on the number of employees that you are recruiting. If you're having people who does not know how to, they don't have the expertise to do the work, you are going to be having a lot of wastages, and that is going to be increasing your cost of production. So your revenue is going to be reducing. So let's come to the balance scorecard. Explain the balance scorecard and how it could be used by CM Limited to measure its performance. What is the meaning of balance scorecard? Balance scorecard. What do you mean by balance scorecard?
Okay, I would say that balance scorecard is a monitoring tool or technique for evaluating the performance of a business based on its financial performance, satisfaction of customers, improvement in internal processes, and how employees are being trained.
Okay.
To improve its general performance.
Okay. 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 That is not bad. That is not bad. That is not bad. That is not bad. Balance scorecard. That is not bad. Anyone else? Yes, ma'am.
I would like to say balance scorecard is a performance measurement tool which is used in assessing or measuring the performance of
Is it my network or?
I think it is his. I cannot hear anything.
Okay, balance scorecard. Someone?
Senior.
Yes, please.
Yes, I would say that it's a form of performance measurement that does not look only at the traditional, does not look only at profitability,
okay,
but also looks at other qualitative factors.
Okay. So yeah. So that is basically the balance scorecard. Balance scorecard is a performance measurement tool that looks at or that measures the performance of a company from both the financial perspective and the non-financial perspective. We look at, okay, what are the things that we can quantify? Okay, the sales has increased our earnings per share. We can measure that we can use that to measure the performance of the entity, but we can also use other tools to also measure the performance of the entity, which are the non-financial measures. They are saying that the balance scorecard approach is saying that before the financial measures have to be met, there are other non-financial measures or non-financial factors that will contribute to this one. So as soon as you are able to manage these non-financial factors very well, your financial objective will just be achieved. If your customers are satisfied, they are going to be doing a lot of referrals for you. If your customers are satisfied, if you are giving them a quality service, you are there to what? To respond to their complaint and those things. Your after sales services is on point. These people are going to be bringing customers for you, and your sales will be increasing. As soon as your sales is increasing, your earnings per share is likely to be what? To be increasing. Okay. So yeah, someone is asking that can we use a balance scorecard for a service organization? Service organization, are they not going to be having customers? Service organization, are they not going to be having clients?
They will.
Okay. So if your clients are not being satisfied, assuming you come to class, like right now, you come to class, the normal class, whenever you come to class, you'll be there. They will say that, okay, waiting for the host to what? To start the class. You are just there. I'm not coming. What will happen? What will happen? You as a customer, what will happen? You as a student, what are you going to be saying?
So you're not reliable.
Okay. So is this likely to increase the revenue that I'll be generating?
No.
If I'm just putting measures over there, I'll just go and advertise on radio and those things. Nobody's going to be coming because the clients are not satisfied because of the level of service that we are giving to them. And they are not even going to recommend anybody. Okay. So the balance scorecard can be used for a service organization. As soon as we can identify customers for them, they are also going to be having employees, they are going to be using technology, and they are also going to be doing things to improve internally. Okay, we are using accounting softwares, so we can do things now to improve internally. So balance scorecard is not only for a manufacturing organization. Balance scorecard can be used for a service organization also. So how the balance scorecard, how it could be used.
So, sir,
Yes, please.
so can we say it's the balance scorecard is just like a performance measurement tool?
The performance measurement tool is not only, if you are saying performance measurement, we have a lot of basically we measure performance based on what? Based on the figures that we are seeing. We use the financial statements. The performance can be measured beyond what we are seeing on the face of the financial statement. There are other factors that will be contributing to what is happening over there. So how can we also use those things? We can also use the customer satisfaction to measure the performance of a company and how good or how better the company is becoming. We can also use the kind of technology that a company is using to determine what they are doing very well. And we can also look at their internal processes. How do we control fraud and those issues? If you go to a place right now, before you can get particular thing, you need to have a card. The card, you have to slot the card into a system to have access. We can also say based on that, these people, they are improving. You will say that, oh, these people, they are improving. So last time we came here, this thing was not here. Okay, so as soon as their system are improving, it means that their financials will also be increasing. Because if you are putting CCTV cameras over there right now, it means that there will be issues of theft and those things will be reducing, which is going to be having a positive impact. So it's not just a financial performance measure, but it's a financial performance measure that measures both the financial activities and also the non-financial activities. All right. So you have to be very, I don't know how I'm going to put it, but you have to be very comprehensive or yes, in your explanation. If you are just putting it as a performance measure, which kind of performance? The balance scorecard is not coming. The purpose for the balance scorecard is for the non-financial measures. It's not for the financial measures, because the financial measures, we can use ratio analysis to do that. So the balance scorecard is coming as a result of the addition of the non-financial measures. That is the actual purpose for the balance scorecard. The purpose is to measure the non-financial measures in addition to the financial activities. Okay, so if you are saying just a performance measure, Okay, I don't know. I haven't marked the exam before, but I don't know. To me, what I'm thinking, to me, they cannot give you maybe the full mark, although they might give you a certain mark for making an attempt, but I don't think they can give you the full mark for that. All right, Senior, I hope you're okay.
Yes, sir. Thank you.
Okay. So they are asking now that how can the balance scorecard be used to measure its performance? They're just talking about the perspective of the balance scorecard. How many perspectives do we have?
Four perspectives.
4 perspectives.
So let's list them and use how they can be used. So the first one is what? Financial perspective, isn't it?
Yes.
Okay. So we have the financial perspective. Then we have the customer perspective. Okay. We have the internal business what? Okay. So the last one is what?
Learning and growth perspective.
Okay. So we have the learning and growth. Okay. Okay. So learning and growth. So how can they use this particular perspective to measure the performance of their company? How can they use this perspective to measure the performance of the what? The entity?
Okay, with the first one, the financial perspective, that one describes how the institution appears before its shareholders or the investors to mean the amount of returns it generates from operations to its investors.
Okay.
So if it is generating so well, that we can say that it is doing well. And before you can assess and say, oh, it is doing well financially, you have to look at certain ratios. You can look at ROSI, you can look at asset turnover, and any other profitability ratios that you can use to measure the performance, the financial performance of the company.
Okay. Okay. That is not bad. That is not bad. Oh. Yes, Sina Mohammed.
So, Sina.
Yes, please.
And so, I don't know, I should pick any of them or just the financial one?
No, pick any of them. He has done very well on the financial one.
So the internal business process.
Okay.
This deals with where it talks about how efficient and up to date the company is in regards to their operations.
Yeah.
The new technologies that are available and how they are making use of the new these new technologies, making their operations more efficient and effective.
Yeah. Okay. Okay.
Okay.
You can continue.
I wanted to add something on the learning and growth.
Okay.
So, with regards to that, it deals with the development of the staff or employees of the entity.
Okay.
The training and development programs that the entity makes available for their employees, and how that helps in their human resource development.
Yeah. Okay. That's not bad. That's not bad. Okay. Yeah. Someone should also, they have done very well on the 3. Okay. You are a customer, we are all customers. So why are we running from
the customer perspective?
Yeah.
So I think this looks at how best we are satisfying our customers or how best the customers are satisfied by the products or services we deliver or render to them.
Okay. 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 So that is also not bad. Okay. So the company can use a balance scorecard by setting target for each of the what? Each of the perspectives. So you list the perspective for them and explain what the perspective is. They can use these 4 perspectives to measure the performance of the company by setting a target. Okay. If you come to the financial perspective, we are talking about how efficient we are using the what? The resources provided by the investors. Okay, the owners, how efficient, how much return are we generating on their income? So we can set a target based on the return on capital employed, what's supposed to be, or what is the return on capital employed we are expecting? What is our growth in what? In our earnings. What is the growth that we are expecting in sales? We can set target for that. Okay, or we can use, you can just suggest that they can use this particular target what to measure the performance relating to the financial perspective. So we can use the ROSI, we can use the net profit margin, we can use the earnings per share, the growth in the earnings per share, the growth in the revenue, we can use those ones. If you come to the customer perspective, you have to know that customers are the, apart from the employees internally, employees are the what? Are the engines of every organization. You can have modern machines. If there's nobody over there, there are nobody or there are no people over there to operate the machines. How do you produce? Okay, apart from the employees being an internal important what resource for the organization, externally to, if you produce, people don't buy the goods. How do you survive? So the customers are also the people that we are existing because of the customers. We are producing because of them. So the customer satisfaction is a core perspective under the balance scorecard. Because if these people are not satisfied, your sales is going to be reducing. These people are the people that are going to be bringing the recommendations for you. Okay, so they can set a target to know how satisfied their customers are. How do we determine your customer satisfaction? You can look at the number of refers that you have gotten from your existing customers. You can also look at the number of repeated what orders. So the customers that we have now, how many of them has order for new quantities, repeated orders? We can also look at the repeated orders. We can also look at the number of customers complaints. So we can set a target based on the number of customers complaints. How many complaints that we have received for the year? Okay, so if you are receiving a fewer complaints or you are receiving higher recommendations, it means that your customers are satisfied. So you can use that also to what? To determine their satisfaction. So we can also set those targets for the customer's perspective to measure how satisfied our customers are. If you come to the internal business processes has to do with how do we work on our system? How do we improve upon our system now to ensure what? Efficient service delivery. Okay, if you are talking about internal system, it means that we have to invest so much in the technology. We are using printers. Okay, so how do we improve internally? How do we improve internally? It means that now we are using, or we have developed a system now. If we print, we don't have to do anything to it again. Okay, if we want to print right now, maybe the printing is going to be passing through maybe 3 processes. So we first print, then somebody will check, then we go and print again. Those are all something that you are improving upon your internal systems, things that are connected to your what? To your operations. So you can also have a testing department after everything, or you can also have handling departments which will be handling the items to avoid rejections and all those things. Okay, so you can also set, or you can also determine whether the company is doing, or the internal processes are effective by looking at the number of product that has been rejected. If we are rejecting a product, it means that our systems are not what effective. Okay, it means that we don't have enough internal processes to check these faults in the product. So we can also look at the number of rejections that we have received, the number of hours that we spent in doing the production. All those things can also contribute to the internal process, internal business processes. If you come to the learning and growth, the learning and growth has to do with the research and development. Okay, recruiting the right people for the job. Okay, organizing trainings for these people. Okay, acquiring the what? The new technology. If there's anything about technology, any updates about technology, you organize training for your what? For your employees so that they will be they will be at a level of what? Up to date what? Information. So organizing training, those seminars that you are going to be doing, those research and development that you'll be doing to discover new ideas, these are going to be connected to the learning and growth. A company that is investing so much into technology and the employees, yeah, they are going to be doing well. It is going to be improving their internal business processes, because if you are having the higher caliber of employees, it means that the number of rejections will be reducing. So if you're investing so much into learning and growth, some of your perspective, you're not going to be investing so much into them. Some of the non-financial perspectives, you're not going to be investing so much into them, because you have a modern technology, you have the required skills, you have the employees who are qualified for the work. So it means that if these people produce, everything will be correct and there will not be any rejection. Even if there will be a rejection, there will be a minimum number of rejections. So if you have systems in place, we have the modern technology, we have the required skills, customer service will also be on top of issues. Okay, so if you are investing so much into the learning and growth, it is likely to cut down costs for the remaining ones. So you just explain to them and advise them on some of the targets that, or some of the measures that they can use to determine whether their internal process is very effective, their customers are well satisfied, and they are investing so much into learning and growth. All right. So all that you have said, there's nothing wrong with that one. I just have to add this one to you so that we move on. Any question before we move on to the B part? All right. So while on the course, the managing director of CM Limited overheard someone mentioning how the performance of their company had improved after they introduced benchmarking. Explain benchmarking and how it could be used to improve the performance of CM Limited. What is benchmarking? What is benchmarking?
Sir,
Yes, ma'am.
Benchmarking is a process of setting standards or targets for products or services.
Okay. Oh, in my class, there is no wrong answer. Okay.
Yeah.
So as soon as you are speaking English, as soon as you are speaking language that we understand, yes, you just have to say, please, if you go there, you see a word you don't understand. Maybe you have seen it before, but you don't know how to explain. Please write something there. Nobody's going to return your script for you. Okay. So you always have to have that in your head. So benchmarking. Anyone else? Benchmarking. Benchmarking.
Sir.
Yes, please.
Yes, sir. Please, benchmarking is a process of measuring your performance by pegging your own performance against the standards set by you or standards set by others.
Okay. That is not bad. That is not bad. Okay. That is not bad. Okay. Yeah, benchmarking. Let's take the last person then.
Okay, so benchmarking is the process of comparing one's products or processes with a target set or with leading competitors' products to see the improvements that have been made over the years.
Okay. What is the purpose for benchmarking? The basic purpose for benchmarking is to what?
To improve on one's operations.
Okay. So the purpose is to improve. So you cannot compare your performance with someone that you are doing better than. No, we don't do that. Is not benchmarking. So the benchmarking, if you are benchmarking, you want to now compare your performance. You identify the best performing unit, or the best performing product, or the best performing entity. Then you try to measure your performance against that particular person's performance. You compare your performance with the best performing product, or you compare the performance of your product with a best performing product, or you compare your operations. You can do a lot of things. You can do a lot of comparisons, but the comparison should be with a best performing product, or a best performing operations, or a best performing entity. Okay, so what we are going to be doing is that, okay, you are currently, we can say that, okay, you have 2 cars. Okay, your brother is not having, your brother, he doesn't even have bicycle. And you want to compare yourself to your brother. No, are you degrading yourself? No, you should be comparing yourself to Dangote and those people who are ahead of you. Yes, that is benchmarking. You want to know why they are doing better, you're not doing better. You want to identify the loopholes in your system so that you can improve upon them. All right, so the benchmarking is a situation where companies compare their performance to a best performing, compares their performance of products or their financial measurements activities to the best performing, or to the activities of a best performing product or a company within the same industry or outside the industry. Okay, how could this be used to measure the performance? Okay, we have a lot of things over here. Okay, the company has a lot of products. Okay, they have a lot of divisions, isn't it? We have the research division, we have the marketing division, we have the product design division, we have the technology and communication service division. Okay, these divisions are going to be having certain things in common. They might all be having finance session. Okay, so we can look at, okay, let's look at our production department. Okay, let's compare our research department or the performance, or how we come with the activities. Let's compare our operations in the research department to the operations in the marketing department. So maybe the marketing department is doing very well in terms of operations. So we can compare a performance of one of the divisions to the operations of the marketing department to see why these people are doing well and this division is not doing well. We identify the loopholes and we try to improve upon them. So the company can do what we call internal benchmarking, where they will pick a section within the organization and compare with the best performing section. So if you're having a lot of divisions, we can pick the finance section of maybe division A and compare with the finance section of division B, because division B is performing better. So we can benchmark their performance to know why these people are doing better, we are not doing better. Maybe they are doing something that we are not doing. So we will now work on that to improve the system. So we can compare the performance of the divisions. You can just mention it out. You can say they can compare the operations of the divisions to the operations of a division that is performing best in that particular session. Okay, so if it is operation, which division is performing very well? Okay, we try to benchmark the operations of this particular division against the other one to know why they are doing well, we are not doing well. So we can do this one internally. We can do the benchmarking internally. Okay, we can also identify operations in our organization and benchmark it against the same operation in a different organization, in a different industry. So we are having our own we are into printing and other issues. Okay, we are going to be having operations. Okay. We can also compare, okay, we can also compare the operations of our printing service to the operations of a bank. If we identify that that particular bank is the best in that particular area. So we can say, okay, GCB, they are very good if it comes to customer service. So we can benchmark our customer service against GCB. That's what we call the operational benchmarking. So this one, the comparison will be done between the entity and a different entity, maybe within a different industry. They are in a different industry. So the banking industry against the printing or the manufacturing industry, we can compare our customer service with them. and identify why they are doing better, we are not doing better. So we learn to improve. Okay, we can also do what we call the customer benchmarking. Okay, what does the customers want? Okay, and what are we giving to them at the end of the day? So this is the expectation of the customers. This is what we have been giving to them. Did we meet their expectations, or we over meet their expectations, or we didn't meet their expectations? If that is the case, why we didn't meet their expectations? We try to improve to do something about that. So you can also use what we call the customer benchmarking. Look at the demand, the expectation of the customers, compare with what you have given them. Okay, their customers are expecting you doing a design that they are going to be having their picture on it. Now you have done the design, they have only their names in it. No, you have failed. So why did we, or why didn't we do what they want? Maybe there's something somewhere, we work on it, this time we improve. We can also have the competitors. Okay, we can also have the competitors benchmarking, where we compare the performance. Maybe we pick an operation or maybe a product. We compare the product, the performance of that product to what a direct competitor who is doing better in that particular session. Who is doing better in that particular session. So in this case, yes. So if we want to do the benchmarking right now, okay, you can pick preset Legon. Okay, if a school want to do, or a secondary school want to do a competitor benchmarking. Yes, we all know that in Ghana, the leading school is a preset Legon. Okay, so you can pick the WASI performance of preset Legon, the students. You look at your own. Why are these people? Because they are all right, all things being equal. They are all writing the same exam. Okay, but why are they doing better than us? Okay, what the school, what are the measures that they have in place? What are the systems that they have in place that we don't have? So we try to work on that so that maybe next time we can also improve upon our performance. So they can do these ones, they can compare their performance, they can compare a target or a division to the best performing competitor. They can compare a division or target with a different organization in a different industry. They can also use the customer's expectation to measure their performance. They can also use what we call the internal issues. So we can also compare our internal ones to improve our upon our performance. So you can just list those ones there. The types of benchmarking. We have so many types. It depends on what you want to benchmark. We have product benchmarking. We have we can also do liquidity benchmarking. Okay, so it depends on what you want to, what you are looking for. So basically, these are the types that we have. Okay, so you can ask them to do those issues and they move on. Let's come to the calculation side over here, which is what we call the throughput accounting. Okay, under the throughput accounting, we are going to be looking at two questions, two basic questions. They are not difficult, but you need to take your time to analyze them so that you will know you will not be there and you don't know what to do. All right, so someone should take the question number 3 for us. Okay, before we look at the benchmarking, before we look at the throughput accounting, okay, the throughput accounting it works like the limiting factor. But you see that the limiting factor, we use all the variable costs. Okay, but for the throughput accounting, we are just looking at what form the major component of the product that we are producing. So the only variable cost is the direct material cost. So what we are trying to do is that, okay, which product should we produce so that we can increase our throughput? Our throughput over here is the profit that we are going to be getting. So which products? How should we combine, or how should we produce our product so that we can increase our throughput? We can produce more goods and get more profit on it. Okay, but the throughput, the only cost that we use is the only variable cost is the direct material cost. Other costs are considered to be costs that are being passed to the customer. Okay, they are costs that are being passed to the final consumer. So if we buy the material, we didn't produce it, the people cannot get it. So the labor coming to work on it, it means that we are transferring the labor cost, the variable cost to the final consumer. So the only cost incurred by the entity is the cost of the material purchase. So throughput, we use what? Only the direct material cost as the variable cost. So you'll be calculating contribution. Contribution under the throughput accounting is calculated as the selling price, okay, minus what? The material cost. Please a minute. Why not what? Why not?
So he's saying instead of the contribution equals to selling price minus material cost, why not throughput equals the selling price minus material cost?
Okay, you can also call it throughput contribution, but I'm doing it under throughput, so that is why I'm just saying the contribution under the throughput. Are you okay? Okay, so I'm calculating the contribution under the throughput. All right. Okay, so our cost of component purchase from external suppliers, part of the variable cost. Who are you going to be buying the component from? The component that you are going to be using, where are you going to be buying it from? Before you produce, you are going to buy raw materials. So you'll be buying the raw materials from external people. Okay, unless you have a division, even if you have a division that is producing and you are still buying the raw material, the entity that you are, or the division that you are doing the throughput for, if that is a cost that they are incurring to produce, you have to, if they have to buy material before they will produce, they will include that cost. Basically, we are not doing this for a division, we are doing this for a company. So the company has to purchase the raw materials before they can produce. So it will be the cost from the external suppliers. Okay, so that is going to be, so the throughput contribution is calculated as a selling price per unit minus the material cost per what? Per unit. Okay, so if you come here, other costs, okay, then we have operating costs. Okay, so the only cost that we are incurring by ourselves is what? Is the material cost, is the material that we are buying. The other costs are operating costs. The labor costs, they are all conversion costs. They are costs that we have to incur to produce the raw material, change the raw material to finished goods. So the labor cost over here, okay, either fixed or variable, is considered as operating cost. Our variable overhead is considered to be the operating cost, or they are all considered to be overheads. Let me just put it like that. And you also have your fixed cost, or the fixed overhead is also considered as operating cost. Okay. What is going to happen is that the question will always, they cannot give you a throughput question. Maybe they have examined the throughput already 2 times already. Okay, so you can see a throughput in the exam also. So you have to pay attention to this one. What they are going to be giving is that is a situation where it is likely to be, they will give you so many products. Okay, you are going to be producing maybe 2 or 3 products, but you don't have the resources to be able to produce that. It means that there is what we call a limiting factor. But under throughput, they are called bottleneck. Okay, so what is going to prevent us from meeting our target, producing the quantity that we want to produce? Under limiting factor, it is called limiting factor, or budget, or principal budget factor. But under throughput is called what? Bottleneck. Okay, the restriction on our production is bottleneck. So they can ask you to find a throughput accounting ratio, or they can also ask you to find, maybe you should rank the products based on throughput. So we'll be looking at those ones. How do we calculate the throughput accounting? Let's come here. Okay, let me just use this. Okay, so let's say we have the selling price of 30. Okay, so let's have our direct material cost. Direct material cost of 20. Okay, what will be the contribution?
10.
Okay, that will be 10. Okay, but what we are using is that we have to use labor hours to produce, but the labor hours is the bottleneck. We are not having enough what? Labor hours. Labor hours is in what? Is in shortage. We have shortage of workers and we can't produce all that one. Okay, we know that contribution per unit is 10. Okay, the question is The question is, you ask yourself, how many hours are you using to produce 1 unit? So hours per unit. Okay. So let's say we are having the hours per unit. Hours per unit is 2. Okay. So if the contribution that we are getting is per unit, if we sell 1 unit of the product, we are getting 10 cedis. But how many hours are we using to produce 1 unit?
hours.
Okay. So the question now is, if we use 1 hour to produce, what will be the contribution? What is the contribution that we are using per every hour that we are using?
5.
5 cedis.
Okay. So we have the throughput. We have the throughput or the return or throughput per the bottleneck. Throughput per the bottleneck. That will give us 10/2. Okay. Then you ask yourself, okay, what is the fixed cost available? The fixed cost is the cost that you are going to be incurring to produce the unit. Okay. So you ask yourself, what is the fixed cost available? The question will give you the fixed cost. Okay. So the fixed cost, let's say the fixed cost is 20,000. Okay, this fixed cost is 20,000. Okay, and now I'm coming on. So 20,000. Okay, so our total hours available. Our total hours available is 8,000. Okay, you know that if we produce, we are going to be covering the fixed cost with what? With the money that we are getting, the profit that we are getting. So if you produce, you are going to incur the fixed cost. Okay, if you produce, you are going to incur the fixed cost. The decision now is, should you go ahead to produce or you refuse to produce? How do you determine that? You ask yourself, for every 1 hour that you are using to produce, you are getting a gain or a benefit of 5 cedis. Okay, if you produce, what is the fixed cost that we are going to be incurring?
20,000.
Okay, how many hours are we going to be using to produce?
8,000.
Okay, so what will be the fixed cost per hour? Every hour, what will be the fixed cost? Okay, that will be 2.5, isn't it? So we have the factory cost per the bottleneck. Okay, so the factory cost per the bottleneck. Okay, so that will be 2,000 divided by 8,000.
20,000.
Okay, 20,000. I'm getting 2.5, isn't it?
Yes.
Okay, but if you produce, how much are you getting? If you produce, what is the contribution per
5
hour?
cedis.
Okay, but for every hour that we are using, we are incurring a cost of 2.5. Should we go ahead to produce or we should stop?
Go ahead.
We should go ahead because our contribution can settle our fixed cost by how many times?
By 2 times.
Okay, so we do 5/2. Okay, this 5/2.5 will give us 2. The 2 is what we call the throughput accounting ratio. So how many times can your benefit that you are getting from produce? You have to know that if you produce, you are going to be using the benefit that you are getting over there to what? To cover your fixed cost. So the question now is, if we want to produce, what is the benefit that we are getting per hour? Okay, if we are producing now, how much are we spending? What is the fixed cost are we spending per hour? So you compare your benefit per hour to your fixed cost per hour, then you decide whether you should produce or not. For you to go ahead, your throughput accounting ratio should always be more than 1. But if we are getting 2 over here and we are getting 2.5 over here, if we should go ahead and produce, what will happen? If our contribution per hour is 2 and we are spending 2.5, if we should go ahead to produce, what will happen?
We'll be getting a loss of 0.5.
Okay, so you can say no, the cost of you operating is higher than the cost of you what? The benefit of you, the cost of operating is higher than the benefit that you get from what? From producing the item. So you can decide not to produce. How? This will be calculated as 2/2.5. Okay, so our benefit is not enough to cover the what? Our benefit per hour is not enough to cover our operating cost per what? Per hour. So the throughput accounting ratio is the throughput per the bottleneck, or the return on the throughput divided by the what? The factory cost per the bottleneck. So you ask yourself, how much am I getting per the limiting factor, which we call the bottleneck? Okay, how much is the cost, the operating cost or the factory cost? How much is it per what? Per hour? You compare the two, the benefit and the cost, and decide whether you should go ahead or not. So they will be asking you for throughput accounting ratio. You calculate your throughput contribution or return on throughput divided by the what? The factory cost per the bottleneck. Let's pick a question on that. And sometimes they can ask you to do the ranking. So you might be having a lot of products and they'll ask you to do ranking. How do we go about the ranking? We will be looking at that also. How do we go about the ranking? The ranking is just like the limiting factor, but we use the direct material cost as the only variable cost to find our throughput contribution. Then we divide by the bottleneck, because we are getting the contribution per unit. We cannot compare them and make a decision. We have to now make sure that they have a common basis that we can do a logical comparison with them. So let's pick the question number 3 and the question number 4. Then we know that we are done for today. All right, question number 3.
Okay, question number 3. Brain manufactures 4 products, A, B, C, and D. Details of sales prices, cost, and resource requirements for each of the products are as follows. So we have sales price, material cost, direct labor cost, the machine time per unit, that's in minutes, the labor time per unit, week sales, demand, the units. Machine time is a bottleneck resource, and the maximum capacity is 400 machine hours each week. Operating costs, including direct labor costs, are 5,440 each week. Direct labor costs are 12 cedis per unit per hour, and direct labor hours are paid for a 38-hour week with no overtime required. Identify the quantities of each product that should be manufactured and sold each week to maximize profit using the throughput accounting approach, and calculate the weekly profit. Calculate the throughput accounting ratio at this profit maximizing level of output and sales.
Okay, so thank you. What is the bottleneck over here? What is the
machine time?
Okay, machine time is what we don't have in excess. So labor hours is not what?
That's the machine hour.
Okay, so let's come here. You can see that the machine time and those ones are given to you per unit, isn't it?
Yes, please.
Okay, so let's come here. How many units are we producing for A?
2,000.
Okay, so if you are producing 2,000, how many minutes are we using per unit?
Senior, are you saying we should mention the demands or the unit?
No, the demand is the total output that we are having, isn't it? Okay.
Okay, so for product A, the demand is 2,000.
Okay.
B is 2,000. C is 2,500.
And 1,500, isn't
and
it?
And the D is 1,500.
Okay.
Yes, please.
How many machine hours are we going to be using to produce product A?
That's 10,000 minutes.
10,000 minutes, isn't it?
Yes.
But we are giving the machine, we are giving this one in hours. So you can change it to hours by dividing by 60. I'm getting 167.
That's 167 hours.
Okay. Let's come to the total machine time required for that. So sometimes you can check to see whether that is actually the bottleneck. Okay, I'm getting 67. I'm getting 67. Is that correct?
Senior,
Yes,
Come
please.
again.
I better go. Come again with the minutes, the hours you are just calculating. Is it you asked of
Yes, sir, 67.
you mentioned 10,000.
Okay. Have you gotten the 10,000 minutes?
No, please.
Okay. We are using 5 minutes to produce 1 unit. Okay. And we are producing 2,000 units. So it means that we have to use 5 minutes in what? 5 minutes, 2,000 times. Okay. If you're using 5 minutes to produce 1 unit, 2 units will be 10. How do you get a 10? 5 multiplied by 2. So just multiply the minutes by the demand, which will give you 10,000. That is in minutes. So you now change it to hours by dividing by 60. Okay.
All right. All right, sir.
3 over 60 multiplied by 2,500. I'm getting 125.
Yes.
Yes, 120.
Okay. 6 over 60 multiplied by 1,500. I'm getting 150.
Yes, sir, 150.
Okay. What is the total hours that we require to produce all the demand here?
509.
Okay. We need 509. Okay. But how many hours do we have available?
400 hours.
So it means that we can't produce all the units. So we have to produce now in order of priority. That order of priority is what they are saying that you should use the throughput accounting approach. So we start over here. This is going to be very simple. Let's have the, so that will be question number 3. So let's have the throughput. Okay. Statements. Okay, based on a ranking. So we have product A, we have B, we have C, and we have D. So what is the selling price per unit?
For A is 1.4.
Okay, A is 1.4. So we find
0.
0.8.
8.
Okay, 0.8.
1.2.
1.2.
2.8.
2.8. Okay. So what is the direct material cost? The only cost that we are going to subtract is direct material. Okay, direct
0.
material 0.6. 0.6. Okay.
0.3.
0.3. Okay.
0.6.
0.6.
And 1.
And 1. So let's find the throughput contribution now. 0.8.
0.5.
0.5. Okay.
0.6.
0.6. Okay.
And 1.8.
1.8. Okay. You can see that all these things are per unit, isn't it?
Hello, sir.
Yes, please.
Please, before that, are we using only the direct material because of the assumption that over here, it's only material that is variable cost in the long run?
Yes, please. We are using throughput, not limiting factor.
Oh, okay. So always under throughput, we only use material cost as the variable.
Exactly, senior.
All right, thank you.
Okay. Let's come to the contribution here, the throughput contribution here. Okay. The throughput contribution here. If you look at it, which of the product is having a higher contribution?
Product D.
Okay, product D. But these are all contribution per unit, isn't it?
Yes.
If they are all should be using the same time, then we can say that product D should be the one to be produced first, isn't it? But they are not using the same time. So we cannot compare them because you are working for 2 hours. You are getting density. I'm working for 4 hours and I'm getting density. You cannot say that you are doing better than me or I'm doing better than you unless we try to find the amount that we are receiving per hour. So if we find the amount that we are receiving per hour, then we can now say that, okay, this person is doing better. If you are working for 5 hours, you are getting 200 cedis. If I'm working for 3 hours, I'm getting 60 Ghana. You cannot say you are doing better than me, looking at, because we are not using the same hours. The only thing that you can say you are doing better than me is, okay, how much are you getting per hour? How much am I getting per hour? We now have a common base, which is per hour. So I can say that, okay, I'm getting 10 CD per hour, you are getting 8 CD per hour. So I'm getting more money than you. But we cannot look at the total amount and say I'm getting more money than you, because we might not be using the same hours. Okay, so what we do is that we break this contribution down now to a common base. Okay, we are getting 0.8 per unit. Okay, our bottleneck over here is machine hours, isn't it? Okay, so let's ask ourselves, how much are we getting per unit? How much are we getting per unit? So if we have per unit for all of them, we can now compare. So you bring what we call your bottleneck over here. So you bring your bottleneck over here. The bottleneck is the machine hours. So please just bring it in units. Just bring it in minutes, because since they are all in minutes, you can just do it per minute so that you can go ahead. You don't have to bring the hours. Okay. So the first one is using how many minutes? So this is 5. Okay. The second one is what?
2.
The second one is how many minutes?
2 minutes.
Okay. The third one is what?
3.
3.
And the last one is what?
6.
6.
So we are getting 0.8 per unit. By every unit, we are using 5 minutes. So what is the contribution per minute? So let's find contribution per minute for all of them. Okay, so that you can go ahead to now do the ranking. The first one is what?
0.16.
Okay,
Hello, sir.
0.16. Yes, senior.
Hello, sir.
I can hear you, senior.
Please, we can't use minutes.
You can't use what?
I think it should be rather. I think it should be rather hours, not minutes.
No, they are.
Yes, sir. Because the total hours is in
Because
the total requirement is in hours.
Total what?
Yes.
The total machine time.
Our problem is not the machine hours. We are using 5 minutes to produce what? To produce a unit of A. I'm getting a contribution of 0.8. It means that 0.8 is equal to 5 minutes. What is the contribution per minute? The second one is also in minutes. We can find a contribution, all of them in minutes and rank. It's not that you have to do in hours. We are just looking for a common ground. We are going to be finding a contribution all in minutes. If you find it in hours, the person that is using minutes, the person will be getting the same answer that you are getting if you are ranking. We are just looking for a common ground.
Okay.
If you are having kilogram, I'm having grams, we cannot compare. You have to change either your grams to kilogram, or I will change my kilogram to grams. These are all in minutes. So if you find a contribution per minute, you are still using common base. How much are you getting per minute? How much am I getting? We are all using minutes, or we have different minutes. No. So if you want to use hours, you can use hours. All the base have to be hours. Fine, you'll be getting the same ranking. But I don't have to do 5/60. That will give me decimal. 5/60 will give me decimal. So I don't have to bother myself to go and change the minute to hours. I can just find a common ground for all of them to be minutes. That is fine. If you are giving hours, fine. If you are giving minutes, just make sure that they are all in minutes. Whatever you are going to be comparing, they are all in minutes. That is it.
Hello, sir.
Yes, I can hear you.
Hello, sir. So, because my argument has to do with when we are determining the number of hours required to produce each of the products, we multiply 2,000.
We just want to know whether the hours that we have available will help us to produce all the unit that we are producing. We need the total hours required. If you like, you can also change the 4,000 hours to minutes, and you compare now. You find all the minutes required for the 4 products, and now change the 400, multiply by 60, and do it in minutes and compare. There's no problem with that.
So, say if I may ask the last question, when you are determining the factory cost per hour, the factory cost,
Yeah,
are you going to convert that hours, the number of hours to minutes?
exactly, because your contribution is calculated in what? In minutes. So you change it to minutes.
Okay, better still, if we are not getting it, let's do as Mr. Lanos has done. Then we then multiply whatever we will get by 60. It will still give us whatever we would have gotten if we had converted it to hours.
Yeah, that's true.
If you want to calculate the factory cost per the bottleneck, you check since your bottleneck, your throughput per the bottleneck is calculated in minutes. You also have to calculate this one in minutes by multiplying this by what? By 60. You change the 400 to minutes and do so that you can compare minutes against minutes. If you are giving 30 kilogram, you are giving 30 cedis, okay, or you are giving 1 cedi. Someone is giving 50 pesos. Can you compare the two? One is in cedis, one is in what? Pesos. It's either you change the pesos to cedis or you change the cedis to pesos before you can compare. Okay, they are all in minutes, so just do your contribution in minutes. Then you now the cost per the factory cost per the bottleneck. You also calculate it in minutes so that you can just do your own. But if you want to do it in hours, I don't have any problem with that because the hours, if you divide 5/60, you are not getting. I'm not sure you are going to be getting absolute what figure. Okay, you are getting 0.0. Are you going to be doing the approximation? No, just find your contribution per what per. It is this revision is very interesting. Okay, it will help you to maybe learn new things. Let's move on. 0.8 divided by 5. What are we having? So we have
0.16.
Okay, so this will be the throughput per the bottleneck. So throughput per the bottleneck. The second one is what? 0.25.
Yes.
25.
Okay, 0.25. And this will be 0.2.
2.
20.
Okay.
2.
And this will be 0.3, isn't it?
0.
Okay. 0.3.
No, 0.
Yeah, 0.3.
It's 1.8 divided by 6. Okay, 0.3.
0.3.
Okay. So which of this is giving us a higher, which of this is giving us a higher return per the bottleneck?
D.
Okay.
0.3.
So we produce this one first. Which one are we producing second?
B.
D.
We produce this one second. Which will be third?
C.
Okay. Then this will be fourth, isn't it? Okay. So let's go to our production plan. Okay. Identify the quantity of each product that should be manufactured and sold each week to maximize profit using a throughput accounting approach and calculate the weekly profits. Okay. So we can't determine the output without what? Without doing the ranking. So let's go now and look at the quantity that we have to produce. So let's look at our production plan. Okay. They also say production mix or the optimal production plan. Let's have the products here. Okay. Let's have the unit that we are producing. Let's have the hours per what. So let's have the minutes requirements. So let's do everything in minutes and now move on. So, okay. So let's have the minutes. Then let's have the total here. Okay. Which product are we producing first?
Product D.
Okay. So the D, we are producing what? We are going to producing
1,500 units.
So
1,500.
So we'll be producing 1,500 at what is the machine hours requirement?
6 minutes.
6 minutes.
So find your total machine hours now in minutes. So multiply by 60. What are we having? What is the total?
9,000.
Okay, that will give us 9,000.
It's 2,000.
24.
2,400.
Is it 2,400 or
24,000?
24,000.
Okay. So
It's
our
24,000.
okay, our machine hours available is 24,000 minutes. Are we okay?
Minutes.
Okay.
Yes, sir.
So if we
Yes.
produce 1,500 out of that, what are we having? How many minutes are we going to be using?
9,000 minutes.
9,000. So it's like 15,000.
Okay. We have used 9,000 out of the 24,000. What is the next product that we have to produce?
Product B.
Okay.
D.
B. Okay. B, how many units are we producing?
2,000 units.
2,000.
At what?
Using 2 minutes.
At
Okay.
2 minutes.
So the
2
total
minutes.
will be
2 minutes.
4,000.
So we'll be left with 11,000, isn't it?
Yes, sir.
Okay.
4,000.
So we'll be left with 11,000. So what is the next one that we have to produce?
Yeah.
Product C.
We have to produce product C, isn't it? Okay.
Yeah.
Product C,
C.
how many units are we producing?
2,500.
At what? At 3 hours, 3
At
minutes.
3 minutes.
So that will give us how many minutes?
7,500.
So it means that we have capacity to produce that, isn't it?
Yeah.
So we have 2,500 multiplied by 3. We have 7,500. What will be the remaining hours now?
3,500 minutes.
Okay. So we are going to be
500.
left with 3,500 minutes, isn't it?
3,500.
Yeah.
Okay. So the product A, we are going to be using only 3,500 what? 3,500 minutes. But how many minutes are we using to produce 1 unit?
5.
Okay. So how many product at 5? No, it is 5. The first one is a 5. The first one is the machine hours.
Okay, that will be 10,000.
Okay. How many?
700.
That will be 700. Okay. We are going
Yeah.
to be producing. So our total over here will be 24,000 minutes. Okay.
700.
Okay. So we have to produce 700 units at 5 minutes to get 3,500. So this is our production plan. Then we have to look at how we determine the profits. Okay. So let's determine the profit now. Scenario, are you there? Very interesting. Don't worry. If you ever
So please, how did you get the 2,400 minutes?
3,000.
The 2,400 minutes. How did you get it? Like you multiply.
I'm here.
We have 400 hours multiplied by 60 minutes. We know that 1 hour is 60
Sir.
minutes. Yeah.
Oh, okay, sir.
Sir.
Yes, yeah.
You see, as I hello, sir.
Yeah, I can hear you.
I think I agree with what you are doing, but as I said earlier, if you could have, let's check the first calculation that we did when we are calculating for the number of hours.
No, we are
you see, it was
we are comparing with the
167
hours. We are comparing with the hours. Okay, we could have also done by multiplying.
So
that
I think that would have been.
Senerico, we are learning new things. I think it's important. It's important.
Okay. Oh, he has an argument. You see, he is asking why we didn't use the minutes for that.
Yeah, because the point is that.
Okay.
Yeah, because we have already calculated. We have already calculated to know the number of hours we are going to use based on the hours.
Yes.
Now we are converting to minutes.
Yeah.
See, so when it happens like this, you're not careful, you'll be confused. And I know that it's the same thing is going to happen when we are solving for the question 2, the B part of it, when we are computing for the accounting rate, the rate of return.
No, I would not have a problem there. I will just convert I will find my cost in minutes. That's all. So you just have to you see, if you are giving hours, if I'm changing the minute to hours, okay, I've done that. I use my phone, I try to change the minute to the hours, but I'm getting decimal. I said no. So if you are going to do this, you might not be getting the actual figures. You just have to be flexible in the exam hall.
But senior nurse.
Yes, please.
Senior nurse.
Yeah, I can hear you.
If we don't If we don't, we're giving us some numbers. So listen, in the case of E, if you divide 0.8 by whatever you'll be getting, you will be getting 9.6. If you should convert by saying that 5 divided by 60,
yeah,
whatever decimals you get, me, I will not convert. So you just come and take the 0.8 and divide by the answer you have. You'll be getting 9.6.
Yeah, if you
so
rank,
it will give you whole number.
If you use the hours,
And if you multiply
the ranking will be the same.
0.16 by 60, you get 9.6.
Okay, if you hours,
So I think the whole thing is in order.
Okay, if you do the ranking in hours, it will be the same. You'll be getting the first one to be D. You'll be getting the same thing. D will be the first one to produce.
Yes,
Yeah. So it will be the same thing. D will be the
same thing. If you multiply
so D will be the first
0.16 by 62, you get 9.6.
Yeah. So if you do it in hours, you'll be getting your ranking right. But if you come to the production plan, you see, this will not give you 1,500. It will not give you a straight figure of maybe 1,500. Maybe you can get a 1,500, but if you come here, this might not give you 700. It might give you something like 6.
D will be 18. D will be.
Yeah, when I use the straight this, I use it in hours. I got it to be 696.
Okay, you will not be getting the 700. So it means that okay, they can give allowance for that. But the thing is, you see, that's what I'm saying. If you are calculating variance, you are looking for the actual rate, you are getting decimal. Just pick your total actual over there, because if you multiply by the actual quantity and the actual rate, you'll be getting the actual figure that you are using. So sometimes if you don't take time, the decimals can. Maybe the examiner has this in mind that student must be creative to know that since you are not getting decimal, you can calculate this on. But if they are giving allowance for that, that is fine. But scenario, you just have to be creative. So I also try.
I'm okay. I'm okay.
I also try to use the hours.
I'm
I was getting decimal, so I just have to rethink. Okay, so let's move on. Okay, let's find our profits for the year. That is something that you are going to be learning about this one also. So let's come to the profits over here. So the profits over here. So we have profits, profit statements. So let's have the profit statements. Okay, so the profit statements we can have. So let's have our products here. We have product A, B, C, and D. Okay, let's come to the throughput contribution. What is the throughput contribution that we calculated?
0.8. 0.5.
0.8, 0.5,
0.6.
0.6,
and 1.8.
and 1.8. So you just look at the demand. Let me put the demand at the top first, the quantity that we are producing first. Okay, let me put that at the top before we move on. So, okay, so let's bring the quantity that we are producing. A, we are producing 700, isn't it?
Yes.
Okay. B is 2,000. Okay, C is how much?
2,500.
Okay. And D is 1,500.
1,500.
So let's come to the contribution for them now, the throughput contribution. So this will be 0.8, 0.5, 0.6, and we have 1.8. What will be the total amount that you'll be getting?
Mr. D is 2,700.
D is 2,000.
It's also A is 560.
A is what? 560.
A is 560. Yes, please. B is 1,000.
Okay.
C is 1,005.
1,005. So we look at contribution, total contribution in value. Okay. Okay, let's come here. What do we have to do? We need to subtract our fixed cost, isn't it? Okay.
Sure.
We need to subtract our fixed cost. Please, this is how you are going to calculate our fixed cost. Okay. This is how we're going to
6.
calculating our fixed cost. Let's come here.
And I do 5 on 2.
Let's come to our fixed cost over here. What is happening to the fixed cost? The fixed cost, we are saying that the labor and the operating cost, labor and the fixed cost itself, they are all going to be included as operating cost. That's what we are saying, isn't it? Okay. Let's come here. What is the operating cost given to us, including labor?
5,440.
Okay, 5,440. Okay, but let's come here. Direct labor costs are what? 12 cedis per hour, isn't it? And direct labor workers are paid for a 38-week what with no overtime. Okay, so the amount, the material, you see, this is just a fixed cost. So they just included the what? The labor cost for the week. This is for a week. So the people are working 38 hours, we are paying them what? 12 cedis per hour. So the amount that they included in this particular one is just 12 multiplied by 38. How much are we getting for that?
456.
Okay, 456. Okay, this is the cost included over here. So take it from
4, 5.
Okay. Take it to get your actual operating cost without the labor. Okay, we are now
4984.
Okay, we are coming to calculate the labor cost itself. Please, the labor cost is a variable cost, but just that we don't treat it there. It will still be a variable cost, but it will be treated as operating cost. Okay, let's come here. What is the cost? What is the labor cost per unit for product A?
0.4.
Okay, let's come here. They are saying that the labor cost is what? Is 12 cedis per hour, isn't it?
Yes.
Okay, so look at this one. Look at this figure. Okay, if we want to find labor over here, the number of hours will be 2/60, isn't it?
Yeah.
Okay, so 2/60. Do 2/60 multiplied by 12. What are you having? We know that the hours multiplied by the rate will give us the cost per unit. What are you getting?
0.4.
Which is the same as this one, isn't it?
Yeah.
Okay, so your labor cost per unit, it is your rate multiplied by the number of hours. The number of hours will be 2/60 multiplied by the rate over here, which is 12. Okay, so you forget about that. What you are going to do is this. Okay, how many units are we producing for A?
2,000.
No.
2,000.
A is 700.
700.
Okay, so we are, we are producing 700. Okay, we know that labor cost per unit is what? 0.4. So if we are producing 700, what will be the labor cost on it?
280.
What are you getting?
280.
Okay, so we just find the normal labor cost, the variable labor cost. Okay, labor cost is still variable. It is going to be variable, but the only thing is that it doesn't form part of the cost that we are incurring. It's the cost that we are transferring to what? To the suppliers. But it will still be based on the what? The number of hours being used. So we calculate, someone is saying that I'll break this one down for you again. It's a very interesting one. So unless the question is saying that the labor cost is calculated based on what? Based on the actual production, which I've explained the time that we are doing the throughput accounting. So let's look at the fixed cost. Okay, the fixed cost itself, which is the fixed cost component of the operating cost, will be the what? The 5440 minus the labor cost. They are saying that it is including labor cost, isn't it? This 5540 is including what? Labor cost. This is a cost for a week. They are saying that the workers are working 38 hours a week and they are paid 12. So the amount that we included over here is 38 multiplied by 12. Okay, so 38 multiplied by 12. What are we having? 546, isn't it? $546, is that correct?
Yes, please.
So what would be the fixed cost itself?
4894.
4894. 94. Okay, let's come to the labor cost now. We calculate labor cost on the unit produced. Labor cost will still be calculated as variable. 4.
The labor cost is 456.
456. Okay. 456. So this will give us 4984. Okay. It's error of transposition. All right. So labor cost will still be the variable. So we have the product here, product A, product B, product C, and D. Okay. We know the labor cost per unit. Okay. Labor cost per unit for this is 0.4, isn't it?
4. Yes. 0.2.
0.2.
What's the rest?
Okay, let me
The line of
0.4 and 1. Okay. 0.4 and 1. Okay. So let's come to let's come to the product that we are producing. Labor cost will still be a variable cost. It will be based on the output at the output level, the same thing, the production level. So we'll be now having the demand that we are producing. That will be 700. That will be 2,000. That will be 2,500. That will be 1,500. So let's come to the labor cost now.
the line of.
Yes, please.
Please, the labor cost, the 0.4, 0.2. Please, can you explain further?
The labor cost is given already to us. Direct labor cost is this one. Then direct labor cost 0.4, 0.2, 0.4, 1.0. Those are the costs per unit.
So did we convert it into hours or minutes?
That is already cost. They have already converted the cost. They already converted the labor cost to you. They say that the people are paid 12 cedis per hour, but we are using 2 minutes. So you have to convert the 2 minutes to hours before you find your labor cost per unit. That will be 2/60 multiplied by the labor rate. You'll be getting the 0.4. So they have done that thing already, and they have given us the labor cost per unit already. This is in Ghana cedis at the top here. These are all in Ghana cedis. And then down here, they are all in minutes. And this is the only one in demand. So they have given us the labor cost already. So if you are incurring 0.4, how many units are you producing for A? Labor cost is a variable cost multiplied by the number of units that you are producing. That is all.
Thank you, sir.
All right, now. So the first one, how much are we getting?
280.
280.
Second one is 4.
Okay. So see.
Yes.
The second one is what? I'm having 400.
400.
Okay. 0.4 multiplied by 2,500. I'm getting 1,000.
1,000.
And this will give us 1,500, isn't it? Okay. So let's come to our labor cost over here as part of the operating cost. Okay. So you have 280 here. You have your 400 over here. And you have your 1,000 here. And you have your 1,500. So let's find our total profit. Then I will come and subtract the fixed operating cost, because that is the cost for all of them. So the fixed operating cost without the labor. So we're supposed to do a total column here, but let's do this one first. I'm having 280 here. I'm having 600 here. I'm having 500 here. I'm having 1,200. So we're supposed to have a total column and just subtract the total figure from it. Okay. So let's have our total profits. Total profit for them. So I need to have a total column there, because the fees, this 49, it is a cost that is incurred for all the 4. But if you want to share them, if you want to share it based on the unit that you are producing, fine, that is going to waste your time. The question just asks you to find the total profit. So just find the profit and take that particular cost from it. Okay, so approach and calculate the weekly what profit. Okay, so just find your total profit and what will be the total profit? 280 plus 600 plus 500 plus 1,200. So I'm having 2580. So I'll have the operating cost to be 4984. What are you having? We're having a loss of 24. Is it a loss?
Yes.
Okay.
Yes.
Okay. So let's now find the throughput accounting ratio. So the throughput accounting ratio is calculated as so you can write the formula down, the return on the throughput for the bottleneck, return on throughput per the bottleneck divided by the factory cost per the bottleneck. So factory cost per the bottleneck. Okay. So we have done that one already. We find it for all the product one by one. So let's find our factory cost per the bottleneck. So factory cost per the bottleneck. Okay. So let's find our total factory cost now. We are going to be having our fixed cost plus all the labor cost now. Okay, so let's put all the labor costs together. 280 plus 400 plus 1,000 plus 1,500. I'm having 3180.
Yes, 3180.
So if we add the two, what are we having? So we have 4984 plus 3180 divided by
8164.
400 multiplied by 60. We are finding all these in minutes, isn't it? Okay. So 4984. So I'm having
8164
divided by
24,000.
Okay. So how much are we getting per unit, per minute rather?
0.34.
Okay. 0.34. So you have 0.34. Okay. So your throughput accounting ratio for product A will be calculated as, what is our throughput? What is our throughput per the bottleneck? 0.16, isn't it?
0.
Okay. So we have the 0.16 divided by 0.34. Okay. So you write the answer there. Okay. Let's have product B.
0.47.
0.47. Okay. Let's come to product B. We go to their throughput per the bottleneck.
0.25.
So that is 0.25. 0.25 divided by
0.34.
Okay.
You get 0.74.
0.74. Okay, let's come to product C. We'll be having what is over there? 0.2.
0.2.
0.2 divided by 0.2. 0.2 divided by 0.34. Okay, what are we getting?
0.59.
0.59. Okay, let's have
0.30.
0.30 divided by 0.34.
0.34.
What are we having?
0.88.
0.88. So if you can see that even if we are using the throughput accounting ratio, we are going to be producing D first, we are going to be producing B second, Then we are going to be producing C what third and also A what the last one. Okay, but look at this one. How much are we spending? What is the operating cost per minute? Okay, but look at the throughput, the contribution that we are getting per what? Per minute. You can see that the cost that we are incurring is higher than what? Than the return that we are getting. That's why we are even getting a loss. So if you go ahead to produce this one, you are going to be making a loss because every minute you are using 0.34 as a cost, but you are getting 0. These figures for them. Okay, so you don't have to produce any of them. That is why we are even making a loss on this particular production. This is basically about the throughput accounting. It works like the limiting factor, but we don't use the total variable cost for the throughput. Yeah, the 3180 is the total labor cost, which is treated as operating cost. It will also be treated as a factory cost. Okay, so that is it. Okay, there is no big deal about that. Okay, so last question. Let's go. Yeah, Sineben, you told me that the figures are abnormal, isn't it?
Yes.
Okay.
But it wasn't this question. Okay, it was this one, this question 4.
Okay. Now you go over how the prop is being used. Okay. Let me go there.
Okay. Should I read?
Now let me come here. Okay, they say operating costs, including labor costs, are what? 5,440 each week, isn't it? Okay. Direct labor costs are 12 cedis per hour, and direct labor workers are paid for a 38-hour week with no overtime. So they are saying that the labor cost is already included over here. What is the labor cost that they are going to be including? It is just the weekly labor cost, which will be 38 hours that they are working, multiplied by the 12. That is the cost that has been included over here. So we have to go and take it over here. It means that the labor cost over here is the 38 multiplied by 12. So the fixed operating cost itself will be the remaining one. But we don't calculate the labor cost by just multiplying 30, the hours that they are working. No, we calculate by the hours that we are spending on the work, the hours that we are spending on the work. So every hour that we are using, every minute that we are using, we are paying 0.4 per unit. Okay, every unit that we are producing 0.4. We are producing 700 for product A. We are using our production plan. We are producing 700, so 0.4 multiplied by the 700, that will give you the labor cost. 0.2 multiplied by the unit that we are producing. We are not using the weekly demand. We are not using the weekly sales demand because we don't have the machine capacity to produce all. So we have now done our production plan based on available machine hours that we have, and that is what we have over here as the production plan. So we are producing only 700 of A. That is it. All right. So Sidabe, take the last one, then we see how far we can go with that. Okay, let's come to the question number 4.
Yes, I cannot. Oh, it is my network.
Yes, yeah, you cannot see my distance.
Okay, question 4.
Yeah,
I can see it now.
who is talking? We can hear you.
Yeah, so a very quick one. You said the throughput accounting ratio. The formula is equal to the return over the factory.
The return on
why are we adding why are we doing it? It's a uniform of cost. That's the variable and the fixed cost over over the material, over the machine hours for each process.
Senior, I didn't get it.
I thought
Your voice is far, Senior. Your voice is far.
hello,
Your voice is too far.
hello, sir.
Yeah, Senior.
Yes, I was asking the formula, the return, the throughput accounting ratio,
Ratio. Okay.
the throughput accounting ratio.
Yeah.
You said it's supposed to return on throughput
Okay.
over the factory cost or the bottleneck,
Factory cost per the bottleneck. Okay.
per bottleneck,
Yes, please.
or
Yeah.
factory cost per the bottleneck.
Exactly.
Oh, so what we calculated is the ratio.
The 0.34
Yeah.
is the factory cost per the bottleneck. So what is the factory cost? The factory cost is the direct material cost, direct labor cost rather, because labor cost is treated as what? As an operating cost if we count to throughput accounting. So we pick the labor cost and we also pick the what? The actual fixed cost, which is the 4984. So we add the labor cost to it. So the labor cost will also be treated as a factory cost. So the labor cost is 3180. Then we add it to the 4984. That's supposed to be the actual factory cost, not the one given to us in the question. Okay. So the one given to us in the question, they calculated the labor cost in the wrong way. So we have to remove that and calculate the labor cost on the actual production. So that's how we got the 3180. We add it to the 4984, which is the actual fixed operating cost. That will give us a total factory cost. And the machine hours is what? Is 400 hours, but we have already calculated the return on the throughput per the bottleneck in minutes. So let's calculate our factory cost also per the bottleneck in minutes. That's why I've divided by the 24,000.
So the 0.34 is the
Okay.
factory cost
Per the bottleneck. Yes, please.
now.
All right, thank you.
And the demand for A, why are we not using 2,000
Why are we not
instead of
using
the 2,000
for what? 2,000
for
for
the demand for A?
yeah. Why are we not using the 2,000 to do what?
To calculate for our the production plan.
What? No.
So we are the A, we are using 200 instead of 2,000.
We are using what?
200 instead of
If you are using the 2,000, we have how many minutes do we have available? We have 400 hours to produce.
400, yes.
Okay. If you change the 400 to minutes, you are going to be having 24,000, isn't it?
Yes.
Based on our ranking, which product are we producing first? We are producing this one first, isn't it?
Yes.
Okay. If we are producing that one, we produce 1,500 at 6 minutes. That will give us 9,000. So your 24,000 hours now, you are using 9,000 out of it. Okay. You are going to be left with 15,000. Okay. The second one we're supposed to produce B. Okay. And the B we are producing 2,000 at what? 2 minutes. That will give us 4,000 minutes. So out of the 15,000, we have used 4,000.
Okay.
So we'll be left with 9,000. Okay. The second production, the third one is supposed to be C. The C we are producing 2,500 at 3 minutes. That will give us 7,500. So it means that we'll be having 11,000 over here. So we'll be having 11,000. And we are going to be using 7,000.
I'm okay with it.
Okay, you're okay now?
Yes, please. Thank you.
All right. So let's snap and take the last one so that we can all go to our bed. All right.
Hello, sir.
Okay.
Yes, Sina.
Hello.
Yes, Sina.
Please, let me to the board there. I want to check something, please. I want to check the throughput ratio for each of the products. That's a minute. ratio, the throughput ratio.
Yeah, that's why I am.
Okay, 0.9. I'm coming. Let me pick something. Okay, that's fine. Thank you very much.
Okay. So it's Naben, you cannot read. Okay, let me show the question for you so that you can read the last one.
Okay, question 4.
Okay.
Brain Limited makes and sells two products, A and B, each of which passes through the same automated production operations. The following estimated information is available for the period. So we have product unit data, direct material cost, variable production overhead cost, overall hours per product per unit, that's in hours. Maximum demand of production or sales of products A and B are 144,000 units and 54,000 units respectively. The selling prices per unit for A and B are 120 and 140 Ghana cedis respectively. Total fixed production overhead cost is 1,470,000 Ghana cedis. This is absorbed by products A and B at an average rate per hour based on the estimated production levels. Please scroll up small for me.
Okay. So can you see now?
Yes, I can see now.
Okay.
One of the production operations has a maximum capacity of 3,075 hours, which has been identified as a bottleneck which limits the overall estimated production or sales of product A and B. The bottleneck hours required per product unit for product A and B are 0.02 and 0.15 respectively. Required. Assuming Della Limited determines profit maximizing mix of products A and B based on the throughput accounting principle of maximizing the throughput return per production hour of the mix of units of product value of that net profit. B, calculate. Please, can you hear now?
Yeah, I can hear you now. So I'm with you now.
Okay. Then B, calculate the throughput accounting ratio for each. Okay. Calculate the throughput accounting ratio for each product and comment on it.
Okay.
C, please, I cannot see. Okay, C. It is estimated that the direct material cost per unit of product D may increase by 20% due to shortage of supply. Calculate the revised throughput accounting ratio for product D and comment on it. Thank you.
Okay, so now I'm coming in.
All right.
Okay. So let's come here. You can see that you are giving the direct material costs. Are you giving a selling price? Are we giving a selling
Yes.
price?
Yes.
Okay.
Yes.
120 and 140.
Okay. So did they identify the bottleneck for us?
Yes, they did.
So what is the bottleneck?
The machine, the
Okay, one of the production operation has a maximum capacity of 3,075 hours, which has been identified as bottleneck, which limit the overall estimated production of source products A and B. The bottleneck hours required per product unit for product A and B are 0.02 and 0.015. You see this thing given to you over here, this is just the total machine hours. Okay, but what is going to be preventing us to achieve the demand is what they are giving to us, the process, the identify as a bottleneck. So one of the production operation has a maximum capacity of this. So this is the bottleneck hours. So this is what we are going to be using in our calculation, not what is given to you over here. This is the overall hours that you are using, which is going to be for a lot of operations. Okay, but we are going to be successful with a lot of the operations, but only one of them is going to be giving us a problem there. And that is what they have identified for you as the hours of 0.02 and 0.015. And the hours available on that particular process is 3,075. So this will be our bottleneck hours for product A and B, and this will be our maximum hours available. So that you always have to identify the bottleneck. It is the bottleneck that you are going to be using to do your calculation. So this hours given to you over here is the overall hours per. They're having a lot of operations. So the hours is for all the operations, but one of the operations or the process are going to be the one that will be giving us problem. Okay, and that particular has been identified and the hours on it has also been identified. So they ask you to, what is the question that they're asking you? They say calculate the mix of unit of product A and B, which will maximize net profit and the value of the net profit. So they are asking you to do the production plan, which is a product mix. So we can't do the production plan without ranking. We can't do that without a ranking. So we need to find our throughput contribution and then we move on. Okay, so let's have question number 4 here. Okay, so we have throughput. So we have statement of okay, so let me just make it throughput. Throughput statements. Okay, so we have the product here. Let's have the product. Product A, B. Okay, so what is the selling price per unit?
120.
Okay, that will be 120. And the second one will be what?
140.
140. Okay. So
Yeah.
what are we going to be subtracting?
Material cost.
Okay. We only subtract material cost. So what is the material cost given to us?
4 and 80.
Okay, so we have 4 and 80. So we have 4 and 80. So what will be the throughput contribution here? 116, isn't it?
11.
And this will be 60. Okay. So throughput contribution. Okay, so let's count to the bottleneck. Okay. So let's count to the bottleneck. What is the bottleneck for? What is the bottleneck hours for product A?
0.02.
So 0.02. Product B is what?
0.015.
0.015. So 0.015. Shit. Let me bring this one here. Because I cannot write that. So product B, we have 140, we have 80, and we are going to be having 60, and this will be divided by 0.015. So 0.015. So let's now get the throughput contribution per the bottleneck. How much are we getting for?
5,800.
Okay, throughput contribution per the bottleneck. 5,800 for the first one. And the second one is
And 4,000.
And 4,000. What are we producing first?
So produce A first.
Okay, A first and B second. Okay, let's come to our production plan or our production mix. Okay, so the production mix, you have your product here. Okay, you have product A. So we look at the unit that we are producing, then we look at the hours that we are using, then we look at the total. Okay, how many units are we producing for product A?
144,000.
Okay, we are using 144,000. So 144,000. How many hours are we using?
0.0 okay, so we use 0.02 per product, so times that.
So what is the total hours that we are using?
2880.
288.
Yeah.
Okay. But what is the total hours available on this particular operation?
3075.
Okay. So if we have used 2880, what will be the remaining hours?
195.
Okay. So we now have B. We now have 0.15, 0.015. So we have 0.015 and we have 195. So how do we calculate the unit that we are going to be producing? We are producing a certain unit at 0.015 and we are getting
13,000.
195.
Okay. So I'm having 13,000. Okay. So this will give us 3075 and this will give us if you like you can total this one. That will be 157,000 units. Is that correct?
Yeah.
Okay. Let's come to profit statement here. Okay. The profit statement, you always have to start with, you have already found a contribution. So you can just start with a contribution. We have the product here. We have this one here. So let's look at the contribution for them. Okay. So the contribution is what? Is 116, isn't it?
Yeah.
Okay. How many products are we producing? How many units are we producing for A?
144,000.
So what will be the
144,000.
what will be the contribution? 116 multiplied by 144. I'm having 16704.
4,000.
Okay.
Yeah.
So it's just the contribution multiplied by your
So
unit.
7,400.
Okay. Let's come to the second one. For that B, we are getting 60 and we are producing 13,000. So 60 multiplied by 13. I'm having 780. Okay. Let's come to our other cost. You have been given the fixed cost. So the total fixed production cost is this one. This is absorbed by product A and B at an average rate per hour based on the estimated production levels. Okay. So we'll be looking at that one now. But let's come here. Did we take the variable production cost before getting the contribution? Did we take the variable production cost before getting the contribution per unit?
No.
Okay.
No.
So that will now be a cost that will be treated as a factory cost or operating cost. Okay. How much are we having for each of them? 56 and 8. Okay. That is per unit. Okay. Let's come here. So how many units are we producing for product A? How many units are we producing for product A?
144,000.
And what is the What is the variable cost per unit? 56. So what will be the total cost? So 56 multiplied by 144. What are you getting?
8064.
Okay.
8064,000.
So let's come to the cost for the other one too. Okay, we have 8 multiplied by 13,000. So they are variable costs, so they will be variable based on the output level. So just how many units are you producing? Multiply by that. I'm getting 104. Okay. Okay. So let's come to the fixed cost itself. Fixed production cost. Fixed cost. So what are they saying for the fixed cost? Let's come to what they are saying for the fixed cost. Let's come here. Okay. So let the question, are they asking us to, they're just asking us to calculate the total profit. So you can ignore and come and subtract it from the total profit. But let's see whether we can share. Let's say the total fixed production overhead is what? Is 1,470,000. This is absorbed by product A and B at an average rate per hour based on the estimated what? Production levels. Okay. So what you do is that you can share this cost. Okay. You can share this cost based on this product level now. So these are the estimated what? Production levels. This is what we are estimating to produce. So we can share this cost, this one now based on this one and charge it. Or you can just ignore the sharing, then you find your total profit and take all of these costs from it because this is a fixed cost. It's a total fixed cost. Whether you produce all the units or not, you still incur the same cost. Okay, so you can either share by having 144 divided by 198 multiplied by 1470, 54 over 198 multiplied by 1470, or you just ignore, come and find your total profit over here. So let's find our profit. Let's find our profit before the fixed cost. So profit before the fixed cost, profit before the total fixed cost. Okay, the total fixed cost for you to. Okay, so what are we getting here? If you subtract A, what is the actual amount that we are getting? 16,704 minus 8664. I'm getting 8640. Okay. 8640. So 8640. Then this will give us what?
Hello, sir.
Yes, please.
Sir, please, with the variable cost for B, if you multiply it by 54, you get.
We are not producing 54,000. We are producing only 13. The cost is variable.
Okay,
It's
sir.
based on the number of units that you are producing.
Oh.
Okay.
Thank you.
Okay. So the last one will give us what? 780 minus 104. I'm having
676.
Okay. So let's find our total profit now. Let's find our total profit and now take the fixed cost from it. So 8640 plus 676. What are we having?
9316.
Okay, 9316. So let's come to our fixed cost. Our fixed production cost. Okay, fixed production cost is what? Is 147, isn't it? 1470. Okay, that is, they have given that to us. This is the figure here, 1470. Okay, so what are we having? We are having
7846.
Okay, so that is the total, or that is the resulting profit based on your what? Based on your plan. Okay, what is the next question? Let's tackle that and go.
Senior,
Yes, please.
sorry to take us back a bit. I got lost when you got to the please your screen, the way the working, sir. When you go to the profit statements,
Okay.
how we compare for the contribution, the variable cost.
The contribution, we have a contribution over here to be 116. So we have the 116 over here. Based on our production plan, we are producing 144,000. So the 144,000 multiplied by the 116, which is the contribution. So the contribution per unit multiplied by the unit that we are producing. That will give us we are keeping 3 zeros. That will give us 16,704. Okay, the same thing applies to this one. We have the 60, which is the contribution that we have calculated already, multiplied by the number of units that we are producing for B, which is 13,000. If you count to the variable cost, they have also given you the variable cost per unit. So the variable cost is going to be based on the unit that you are producing. So we have 56 over here. Okay, we are producing 144,000. So what will be the total variable cost? 56 multiplied by 144,000. We have 8 over here for B. We are producing 13,000 of B. You multiply by 13,000, keeping 3 zeros. We are going to be having these figures.
Thank you.
All right. So let's count to the throughput accounting ratio. So calculate the throughput accounting ratio for each product and comment on it. Okay. So let's count to the throughput accounting ratio. Okay. So the throughput accounting ratio is calculated as the contribution, throughput contribution the bottleneck. So the bottleneck, okay, divided by the factory cost. Okay, so the total factory cost or total operating cost per the bottleneck. Okay, so always we have calculated the throughput already. So we have calculated that one already, which is 5,800, and this one. We just need the factory cost or the operating cost per the bottleneck. So the factory cost per the bottleneck. So you have your fixed production cost, which is 1,470. Then you now add your variable cost. The variable cost, which is not captured in the prime cost. We assume that it's only material cost that is variable. It's only material cost that is a direct cost. So that is the only cost that we use in the contribution. Other variable costs will be treated as what? As an operating cost. So we just put the 2 over here. We have calculated this already. Variable cost for A is this one. Variable cost for B is this one. Let's add the 2. What are you having? I'm having 8168. Okay. Divided by the total machine hours available. That is 3075. Okay. The question has given you that the maximum capacity is this one. So this is the total hours available. Okay. So how much are we getting per the bottleneck? 2 points.
3.1.
I'm getting 2 point something. So 14,170 plus 8168 minus 3075. Okay. Plus 3075 divided by 3075. Okay, 3.13. Okay. 3.13. Okay. So our throughput per the bottleneck over here, let's count to product A. Okay, let's have product A here. Okay, product A, the throughput per the bottleneck will be 5,800. Okay, 5,800 Okay, so you have 5,800 divided by the 3.13. What are we having? So that's B will give us 4,000 divided by 3.13. What are we having for the two? The first one is what?
The line of please with the factory cost, we left 3 zeros at the top. So
Senior, it's not. It's supposed to be 3134.
3,1.
The factory cost will be 3134.
3,134, isn't it?
Yes, yes.
Yes.
Okay. So so it's supposed to be 3,134 because of the 30.
34.
Okay. Sorry. So we are now charging. A full cost. Thank you, Zina. So let me just add all the zeros to it over here. So that will be 3,134. Thank you very much. Okay, so we have 14 plus 8,168 times 1,000 divided by 30.75. Okay, that will be 3,134. Thank you. Okay,
34.
Okay, 3,134. I didn't pay attention to that one. Okay. So we have 3,134. Because I was like, how? 3,134. Okay. So let's come to what will be the figure now. 5,800 divided by 3,134.
1.85. The first one is 85.
Okay, 1.85.
For E.
Okay, they say you should comment. The comment means that okay, we can actually pay the product A. If we produce the product A, we are going to get a return of 1.85 per every 1 cedi of the factory hour that we are using. Or we can pay our operating cost 1.85 times. Okay, that is the meaning. Let's count to this one. This will also be what?
1.28.
Okay, 1.28. Okay, so 1.28. So for every 1 cedi, that we are using here, we'll be getting a return of what? 1.28 on it. That is the meaning of the throughput accounting. Okay, so you are going to be getting a return more than what you are using. Okay, so that is but the product A is going to be giving us a higher return than what product B, and that is why we are even producing the product A first. Okay, so for every 1 cedi of the operating cost, you are getting a return of what? 1.85 on that. Okay, or our throughput can be able to settle our operating cost 1.85 times. There is no problem with that. Okay, let's count to.
Please,
Yeah.
can you go back to the calculation of the factory because I want to take a screenshot.
Screenshot can hold. All right, it's easy. I know it was. Time price star. Yes. We will come.
Thank you.
Oh.
Linus,
Yes, please.
the factory costs. I understand how we had the 1470 or the 8168.
The 816 is the total variable cost, the total variable overhead cost. 8064 plus 104.
Okay, all right, thank you.
Okay. Let's come to the last one. I don't think some of us we are already tired, but have a good one. Okay. It is estimated that direct material cost per unit of product B may increase by 20% due to shortage of supply. Calculate the revised accounting ratio for product B and comment on it. Okay, what is the current material cost for product B?
80.
It's 80, isn't it?
Yeah.
If that is increasing by 20%, what will be the new material cost now? Okay, so you have to find your new.
96.
Okay, so you have to now find your new. So let's come to the C side. You have to find your new return per the bottleneck. So let's come to products because they are asking you for accounting ratio. So we have your selling price. The selling price will remain constant. How much are we having? 140, isn't it? Okay, but the material cost will now increase by, so we have 1.2 multiplied by 80. How much is the total?
96.
Okay. So we have 96 now. So that will be 96. What will be our throughput contribution?
44.
Okay. And what will be the contribution, throughput contribution per the bottleneck?
$2,933.
Okay. So that will be, we have the bottleneck here. Okay. So the bottleneck will be 0.015. Okay. So I'm having 2,933, isn't it? Okay.
Yes.
So our throughput accounting ratio. So the only thing is they are asking for accounting ratio. You just have to calculate your revised throughput per the bottleneck. The 31, 34 will still be the same because the factory cost is not increasing. It's only the labor, the material cost that is increasing. So we now have 2933 divided by 3134. What are we getting?
Zero point 0.94.
Okay.
Yeah.
0.94. You can see that the throughput is now reducing. For every 1 cedi of the operating cost, we are getting only 94 pesos on that. Okay, so the throughput accounting ratio has reduced by what? You just put the figure there. First, it was 1.28, now this one. So the throughput accounting ratio decreases by how much? Decrease by 0.34. Okay. So the 0.34 is 1.28. 1.28 minus 0.94. Okay. So the comment is what? For first, we are generating a return of what? 1 cedi 28 pesos for every 1 cedi of the what? Of the cost that we are incurring, or the factory cost, or the factory that we are using, the factory facility that we are using. But right now, for every 1 cedi of the factory facility that we are using, we are only getting 0.94, or even our return that we are getting cannot recover or cannot help us to cover our factory cost, because the return is 2933, but we are now what? We are now getting what? The factory cost is 3134. It means that the factory cost is higher than the throughput per the bottleneck. So we will decide not to produce this one because the cost of operating is higher than the benefit that you'll be getting from that particular operation. All right, so this is all about the activity-based costing, the throughput accounting ratio, and the throughput. You just have to understand that it's only material cost. That is the direct material cost. Only material, or the contribution, the throughput contribution is calculated as the selling price minus the direct material cost. All other variable costs are treated as what? Operating costs. So they will be included if we are calculating the throughput accounting ratio or the factory cost per the bottleneck or the operating cost per the bottleneck, and they also be subtracted when we are calculating profit. You have to know that direct material is the only direct material cost or direct cost. Direct labor, variable overhead, any other variable cost will be treated as an operating cost, but this will be calculated as if they are still what? Variable cost. They will be varying with the output level. So if you want to find the amount, it is the cost per unit multiplied by the amount that you are producing, not your budgeted one. You will not have the resources to produce all of them. So the quantity that you are producing, you find your what? Your direct material cost or your variable cost on them. Unless the question is saying that the material cost or the labor cost or the variable overhead are calculated on the what? On the budgeted production. So you just, if it is on the budgeted production, you just go and multiply by the production over here. So if the question says that the variable overhead is calculated or the factory cost is calculated based on budgeted production, then your variable production cost for B would have been 8 multiplied by 54,000 because we have to calculate it on the budgeted production. But if nothing is being said like that, it will be calculated based on the units that you are producing. You always have to pay attention to that. Any question? All right. So if there are no questions, good night. I will see you guys tomorrow. Thank you all for coming. Have a
Thank you, sir.
Welcome. Thank you very much, sir.